like we are up and running here. Sorry for the white screen. It's just not showing the stream up. It says I'm streaming. I'm going to say it's up. I feel like an old man here. Okay, well, I believe it is up and running. So what I'm going to do here is go through my higher time frame process. I'm going to drop a few screenshots and this is how I operate. Okay, so I start out right here. Take a look at the data that's printing on the day. And so today we have PPI, which is already printed at 7:30. So unemployment, Canadian unemployment, US PPI. US PPI came in lower than expected. The orange folder data came in as expected, so neutral. We have Fed speakers. We have Michigan sentiment here at 9 o'clock. And that's pretty much it on the news front. So I'm going to save that. I'm going to print this into my Discord group. Note the PPI at 7:30 and Michigan sentiment at 9. And then some Fed speakers as well. So I start that off, and once I kind of note the data times, then I come to this historic time frame chart. And this is really simple. What I'm looking at is where are the threes on this. And so we have a breakout level. And that breakout level is right here. Try to do things and make it look nice. I don't know what happened there. Why did that get way up there? Okay. So we have the breakout here. And then we have 1, 2, 3s. And 1, 2, 3s are just noting the price check. So right now we've broken out. If the breakout fails, we come back to 1. That's the theory. If 1 fails, we come to 2, and if 2 fails, we come to 3. So just gonna save that. That's pretty simple higher time frame analysis. Let me drop this into that chart I call the historic time frame. we are above that historic upper edge. We haven't come into any kind of balance up here, so we do have 1 day of balance, but not, that would be higher time frame balance, not historic time frame balance. So that's pretty much it on that chart. So then I drop down to a chart. Time frame doesn't matter so much. What I really want to do is just see the price action that's happening on the chart, and I don't care if it's 1 minute bars or 5 minute bars. I just want to see what's going on here. And so I will note the levels that I just noted on the other one. So I'm going to do that by screenshotting this and just noting where the higher time frame is. So this is the historic time frame sandbox, and that starts right there and it goes down to right there, and that's the 2, so the 1 and the 2 on the other chart that we just looked at. So when I say 1 and 2, what I mean is we have the breakout level, we have the what I call the 1, and then we have the 2. This is the 1, that's a return to that higher time frame upper edge, and then the 2 is a return to the next check lower. So I'm just noting, if we get into the higher time price ladder, that this is the ultimate destination if we start selling down. As long as we're above this historic time frame upper edge, we're pretty solidly in the breakout category, and there's really nothing else to do. So I'm going to do this in gray to match the gray of the VWAPs, and then I'm going to note the higher time frame sandbox. The higher time sandbox is everything from here to here, and you can see where we have 1 day back in blue, 2 in red, 3 in orange, 4 in gold, 5 in green, 6 in teal, 7 in pink, and there's a gray 8 in here too. And what I'm looking at is the VWAPs from the last swing down and the last one. That's going to create what I'd call the higher time frame edge. Higher time frame just means that it's higher than developing, higher than intermediate, but less than historic. So it's where we broke out from the historic and the last swing, and those VWAPs that kind of encompass that. So I'm going to note this, and we're going to call it the higher time frame sandbox. Don't really have a color scheme for this because it's multicolored, so I'm going to do something like this. And we'll give the border a different color, maybe something like that, and then maybe we'll drop the text in here. We'll make it yellow, and that's the rainbow. Okay, so that's our higher time frame sandbox. Goes from 0 day back down to whatever the last VWAP is. And you can see it extends slightly below. Okay, and then we'll talk about the intermediate sandbox. The intermediate sandbox is basically yesterday's price range. And so we're just going to drop this. I saved it, and then I'm going to drop this in here. So historic time frame sandbox, higher time frame sandbox. So I note these, print them, and then we're done with this chart, and we can come into this chart. And so the yesterday's sandbox is going to be from yesterday's low to yesterday's high is going to be yesterday's sandbox. I'm just going to pop on a couple sets of VWAPs here. We're actually going to go to a 1-minute chart here because it's just a little easier to define the sandbox, and then we'll whittle it down into intraday. Okay, so yesterday's price action started down here, and it created a balance, and that balance is coming from this edge here and this edge here. And so no matter how many VWAPs that I put on this chart, these edges are going to be the same. I could turn them all on, and we're never going to, our sandbox is never going to be more than here. So you can see from this high up here, our edge is here. Okay, that's the high from 2 days ago's RTH. That edge is right here. The high from today's sandbox is actually below that, so it comes in right here. And I don't know if you can see it or not, but that's the one we're concerned with. So we want to see what the sandbox is from yesterday, because today we're trading against those people first, and then this edge second. So the true sandbox is from here to here. So 24.25 to 28, very tight range. Okay, that's going to coincide with approximately 1 day back to 2 day back. Okay, so 1 day back and 2 day back are kind of the generic, and I can drop these on here. go. Okay, so we get into these are the price ladders here. So we have the intermediate time frame sandbox here, higher time frame sandboxes, working our way down the price ladder, and they continue on the way down. So if we have weakness, these are, if we fall out of the 1 or fall out of the 2, then we target first the RTH open VWAP and then the full sesh. How about now? Sound, sound, sound? Any sound now? Check, check, check. Bluetooth connected. Okay, we have sound now. Good. So there. So we have our higher time frame price ladder starting at 2, and then back to that RTH VWAP here that we found buyers at yesterday, and then 3 proper, 4, 5. We got a couple higher time frame price ladder checks all the way down to that upper edge that we could go down to. So just kind of keep an eye on them. Right now, we are in what I would consider balance with a skew to the upside. So you can see we have chop, chop, chop all the way through here. Rotational trade. We have 1 stacked above 2 still, so blue stacked above red, and potential to rotate on both sides of this, come down, find a level of buyers, take it up and rotate back up to the top. We are at all-time highs here, and if you look back on the historic chart, we're either consolidating here to make another leg up, or we're consolidating here to get out of the positions that were accumulated down here and then take it back down for a deeper price check. So I'm going to keep an eye on this. In the historic time frame, I want to see, to go short, I'm going to want to see the 1 day back start the day out below 0 and finish the day out below 0, and that would be a change of pace. That would be a breakdown here somewhere. And the way the market is moving the last year or two, that breakdown could be really fast. We could see this thing go from here to here, like literally in a day. It doesn't really mess around. So we might not get that cross. That might happen intraday, and so we have to be flexible and open-minded about price action. So just like sorting out the day, noticing that we're in balance, rotational, been to the all-time highs, maybe we go lower. I'm looking at taking trades in this direction probably until we break down here and refuse to go higher. So range expansion south and refuse to go higher. So that's the higher time frame. Intraday, we're rotating off of this 2 day back right now. We're a little bit bullish in the intraday just because we're below 1, but because we're rotational, we could rotate on both sides of that balance. So if we have 3 days, 2 days worth of balance here, we have 2 days back, 1 day back, and now a new day and 0 day back, all stacked up here. So what I'm thinking is this balance of 0 and 1, we're rotating around. If we reject 2, now so far we've accepted 2, but if we reject 2 and start working our way back down to here, and I'm going to drop this VWAP on this chart. There we go. If we come back down to here, then I would say proper check on 3 is in order. And then at that point, I would consider this kind of a blown structure. I'd maybe still be willing to take a trade back to the 0-1 off a range expansion, so back to 0-1. If we were to come down there, but if we come up and can't get above the edge, then I think at that point where 0 starts stacks below 1 and 2 is going to become a 3, and then now we're going to have a 1, 2, 3 up here, and it's going to be they're going to be flipped. So 1's going to be on top of 0 and 2 is going to be on top of 1. At that point, I'd start to think, okay, maybe we're going to start climbing this price ladder down. So right now, I'm looking for rotational trades in both directions, but with more of an upside skew than a downside skew. So developing sandbox looks like this today. This is the developing sandbox over, let me grab a pen. Yeah, so developing sandbox right here. And you can see that we're right smack in the middle of that developing 1 stack. And so we're going to treat this as 1 VWAP, and the next check down is 2, which we just got. So rotational back to 1. Hope you all got a piece of that. The bars look big, and you know this is not a lot of range. 23 to 27 is 4 points, but or 21 to 27, so it's 6 points. But if you can see the play here, it's back to here, and then because of being below 1, there's actually a decent short opportunity as there was here back to the lower edge. Now the range is starting to really tighten down. Our developing sandbox is 24 and 27. This thing's eventually going to come to a point, just like all these consolidations do, and then we're going to break out of that as it comes down to a point one way or the other. So we're really in a rotational market. Any longs I take, I really want to come from below the stack. Any shorts I take, I really want to come from above the stack. So I want to look for range expansion up off of the 1-0 stack here. I don't necessarily want to take shorts here because right now we're on a long trajectory from here to the other side of balance. So, but we might sell that edge, but the market really is, it has the potential to rotate on both sides of that balance, and so I need to be cognizant of that. Profile yesterday was symmetrical. We have kind of a triple tit profile today, so we have high volume node up at 33. We have the VPOC in the middle here at 27, and then we have kind of a high volume node down at 20. So it looks like we're starting to build out a similar profile to yesterday's price action, and that's just because we're in balance and we're painting that bell curve. just going to look at some VPOCs and make sure I got those in the right spots. Maybe. Alright, so that's today. So we got a VPOC down here. We got another one right here. Am I right? What are we on here? Day session chart. So that's yesterday's. There's today's. And let's check micro composites. This one can go up a little bit. You can see I'm pretty lazy with my VPOCs. They're all kind of automated. I just put them on and whoop, I just put them on and that's it. And I don't like, they all propagate through the software. So if the value areas are overlapping, so I have different value area sizes. So standard value area is 70%. I'm looking at 99%, 97, 95, 93, and 91, and 88% of value. And if they are overlapping, if those value areas touch each other, it just puts the profiles together. And so, like for Tom, I kind of like back tested Tom's, like how he typically draws his. His are like 96%. 96% of value. He kind of brings them together. I just look at them all and then I put the lines on the chart and they are what they are. So right now, in this configuration, in this balance configuration, what I'm really looking for are wicks down outside of the sandbox, and I want to trade back towards the middle. So I want to see price today. I want to see price break up, and then I want to trade back down, or I want to see it break down and then trade back up. If we lose 2 and refuse to give it back, then I'd start targeting down back to that buy zone down here. If we lose this, then I would say down here, and then we're in the price ladder, and we can see like some stair stepping down. This is really the area that I think we would aim for to the downside. 77 to 23, so about 50 points. I don't think that's unreasonable if the market wants to sell. So that would be my downside. We're already below the 1, so I'm leaning to the downside just because we got 0 dropping below 1, price kind of trading below 1, but I really want to see this thing fall out, reject, and then start motoring down. So we'll see what the open offers. I would say this morning the trade is going to be rotational with a higher time frame and historic time frame upside skew, but noting that we were at all-time highs and we already ranged up. It's Friday. Potential is for the market to take some profits and sell down back to recheck those lower price levels. So we'll kind of keep that in mind as the day develops and see how our plan shakes out here. So scenarios for today are rotational to the upside. I'm looking for wicks down outside of the developing balance, or wicks up outside of the developing balance, or intermediate balance to trade back to the center. center being the, the VWAP stack here. I don't want to trade the developing edge. I want to trade a different higher time frame edge. So on the upside, our intermediate time frame edge is right here, and it's actually getting pulled around in trade. So if this is our intermediate upper right here, you can see it got pulled up with this move up here. So I'm not sure why this ETH volume was able to influence that edge, because there's plenty of volume that traded up here, but it still pulled that up pretty hard, which is interesting to me. It just tells me that there's not any selling pressure and that the VWAPs are able to move it around on pretty low volume. I don't think we had a ton of volume in that area there. Overnight volume, oh yeah, overnight inventory is only 200,000 in and 100,000 in minis. So it was able to pull it up. There must be some pretty good volume in this leg here to be able to bend that rope up that way. Nonetheless, they sold it down, and you can see that rope bent down here. So the price is getting pushed around. I think on generally light volume. So higher time frame up, historic time frame up, intermediate time frame sideways with the potential for down today. So that's what I'm looking for. All-time high here, and then we have a couple swings here. So I'm going to be patient today. I'm going to look for range expansion on swings to sell back to the middle, and would actually prefer to buy either this level again, this level again, to trade back up to here. And anything from down here is a little bit like catching a falling knife, because we have the potential to fall out, and once we start range Xing down here, we may not come back up here. So let's just have some patience today, let this thing unfold, look for range expansion outside. I might actually need another. Look for range expansion outside of our developing profile and trade back in, whether we're taking shorts or taking longs. So that's the game plan for me. We do have one more piece of data here this morning. I'm going to try. I don't like the way these profiles look. They're so dirty. So let's see if I can. I want about $1 range on these candles. Yeah, that's so much easier for me to see right there. There's that edge from yesterday, right there. So that sandbox right here, and then this is all just range X and back to it, range X and back to it. And so that's how I want to trade this. I want to look for opportunities outside of this intermediate balance or at the edge of the intermediate balance back to. But as this starts to tighten up, the edge isn't really offering us anything. So I'm going to really look at, well, which side is seeing range expansion. We had nice range expansion here, and then came back inside. And so far, less range expansion here, but that could be changed. That could change in a hurry. So we could see this come down and then come back up to that edge. So this is our developing sandbox. We're in balance, so we can range X out of it and then return to it. We can range X out of it and then return to it. I really want to see, and this is going to be kind of important for today, I really want to see the market interact with a level down below. So you can see here this is where you got long yesterday, Ra, and I want to see it come into either a level like this or a hard level like this. If we fall out, there's a level here, and then here's the proper check. So I want to see price interact with a level. I don't want to just take a trade because there's a signal out here. So I'm looking for a range expansion on this to go back to here, or I'm looking for range expansion here to come back to here, and all of them can be traded just back to the middle. Take it off, or you can try and go for higher. But in a rotational market, if we're taking shorts back to the middle, like that might be the end of it before it comes back, because the higher time frame is up. So we have to kind of, it's going to be a little harder to trade for any distance here until we break out somewhere. I would say I'd be more willing to hold from the low side for higher right now, but that could change. Going forward, and I do see the potential for profit taking today. So, do you have any ideas, any thoughts today? Anything you're watching? All right, I'm gonna go fill up a coffee and let this thing kind of do its business until we reach one of those conditions where I can trade back to the center. That's my plan. Be mindful of this edge here, dropping down below the intermediate edge from here. So we have kind of a similar scenario. We actually, I think largely the participants from here got popped on this move up. So I don't know that we're going to have anything stacked because of this edge, but we will have liquidity stop stacked above the edge that's dropping off here. It comes in right around 27. So that's going to be our stop run. I think anyone who got popped out on this move, I don't think they dropped their stop down to here. So I think we do have fuel above here still. That would be a continuation of the fuel from these shorts here, whatever's left over back up to the high, and I don't know how much there is. So the fuel is kind of stacked here. That's where the intraday squeeze starts. This is where the intermediate time frame squeeze would start, but it's already been started here. So I don't know how much fuel we have to the upside, and then of course to the downside, there's all sorts of fuel stacked here from yesterday's edge. I'm going to add a couple more clicks here so we can see it. That's pretty good right there. So this is yesterday's edge here. That creates the lower edge of the sandbox. Actually need that. That creates the lower edge of the sandbox, and same scenario here. We cleaned out a bunch of the stops on this lower edge on this, so I'm not sure how much fuel is under here. I think it may be down here. So we have, I think the fuel from this selling has been cleaned out up to here. The fuel from this buying has been cleaned out down to here. So we're looking at the fuel here and really the fuel off of here. Those are kind of I guess we have this here too. Those are kind of the two areas where the fuel exists. So I'm not looking for like a huge powerful move because there aren't a lot of shorts. The longs are from ETH low, and the shorts are from ETH high. So it's going to take new buyers or new sellers to move this market, if that makes sense. If this hadn't happened overnight and this hadn't happened overnight, it would be a different scenario. Then we would have a lot of fuel stacked up because it'd be all of this and it would be all of this. But because we've cleaned a lot of that out in the ETH, I don't know how much fuel is stacked up there. So I'm not looking for a big explosive move. I think the potential is to just continue to consolidate here, and that may be the case. We may not see a lot of selling today, a lot of profit taking. I mean, I know I'm chomping at the bit to get a dip in this market so I can add. I got a 401k allotment. I need to get into it, so I'm looking for that. Okay, you're going to wait for the lower bands. Fair enough. I think you got to get outside for sure. I do think, just as a thought, and you can note this observationally, I think we're in balance here, and if we go much beyond 3, that would be a breakdown from balance. So just think about this, you know, if you were looking at it in, say, Bookmap, and this was just like a $2 range from here to here, you know, think of this as the chop and the breakdown to 4 as the weakness. Put your long off of 2, 3, or 4, or wherever you come from, back to here. If it doesn't get above, that's the retest. You know, think of Tom's trigger setup. That would be the retest of the volume here, and that would be a pretty solid short opportunity if we found weakness there. And of course, you got to do it, you know, a little bit at a time. You can't just like short that trigger and throw your stop above the high like you would if it were a $2 range trigger in Bookmap. But just keep that in mind. So it sounds to me like you're more long biased and looking for a pullback to buy. Is that kind of what you're thinking? Yeah, I think that's a solid strategy. I mean, you may not get a trade if the market liquidates today and if people start taking profits, but I do think that's a good plan, you know. And some days the market doesn't do anything, and you just, you know, I think you just do nothing, you know, and that's okay too. You don't have to force anything. Definitely requires patience. These rotations are 5 points back to here. This isn't much, you know. This is a very tight range. The candles look big, and you know, this is on a 4K monitor, you know, full size. So it's like, oh, those are really big candles, but they're actually more like this, you know. In reality, they're not very big. So I like to blow it up to see the detail, but it's easy to get like distracted by like, you know, how big the candles are. Like, oh, look at that big candle. Well, it's like 2 points. But rejection of the edge, rejection of these VWAPs does set up a push down. I don't know. You know, if I start seeing a motoring down, if we take out overnight low and keep going, if we take out this and keep going, I might be inclined to hop on that short somewhere. But I would have preferred to get the short here back to the middle, and then you'd be well positioned, you know. But we do have overnight high that we can take, and we can take out either one of them. So we're just gonna have to let this thing let this thing ferment. Okay, I'm going to quick go fill up a coffee, and I will be back for the open. And we're off. No shortage of buyers off the 2-day back here, looking to take it high. I think ideally we would have gotten a deeper pullback and got outside of this balance. Watch the stomp here. We didn't get it here. Look for weakness or a failure to take out overnight high, maybe, as a potential to mean revert here. Most certainly the long play off of the intermediate lower edge here makes good sense. Just the current shape of the market, not sure if it can support it. All the liquidity in the book is stacked to the upside though, so that's something to note. did you just get IRT? Are you pretty new to it? So just kind of look at the price check that we had yesterday. Consider that price check, raw, where you got long. And I know you can't hold this, but when we have a higher time frame price check like that, and this is what I was saying, let's look at. I posted that chart last night and said let's look at the price action and see if it takes out all-time highs. What I meant by that and what I was suggesting is that price came down and connected with a higher time frame level and made a clean rejection of it, and then came back up and came back into balance. And so what I was thinking is, like, if that is the low, then where is the high? And the high would be to come back up to all-time highs. That would kind of create that signal. And so if we just look at, like, okay, well, we put the low in, and then ETH didn't take that low out, it actually respected it, and then they bought it up, and now we're making higher highs and higher lows here. So think on a higher time frame, we have higher highs. So where's the next higher high? It's above here, you know. So overnight high makes pretty good sense here. And now we have sellers front running overnight high, so that's interesting. And back to VWAP. So overnight high selling it. Is that what we opened? Lower in range today? Sometimes this indicator doesn't work great when you have lots of stuff on your chart. We didn't get overnight high. I would probably mean revert short that overnight high if we got up there. But I don't know. There's a lot of liquidity above. I don't know if that is going to get taken now or sometime in the future. Developing VWAP, we failed overnight high. Keep that context in mind. Developing VWAP puts 0-day back on the deck, and we have to get through the intermediate. So potential to stomp this edge for continuation, or come all the way to the south side of this. I like the range expansion just from like a higher time frame, intermediate time frame perspective. We expanded range on this intermediate profile. We didn't expand it quite enough though, unfortunately, so lower high, but a higher high here. Catching a ride off of this swing lows VWAPs here, so the move from pre-market, maybe even this swing low. I think it's actually here from this low. That's like the anchor from here, catching a bump. Sellers at this edge. We need to break above this edge, stomp it and find new buyers, or potential to fully mean revert here. range open. Okay, well, I wish that lower range open had balance, a balance, or that stat had a balance open, because we might be lower in range, but not by much. You know, it's really just in the middle. Overnight high stats only 51%, P high 43, so low stats to the upside here. Overnight VPOC, which we got, was 80%. We opened at it, and then overnight low is a 66% stat. So higher stats to the south. We got P mid. I think we already got that. Zero-day back was below 1, was dragged up above 1 now. So buyers, there's some weight, enough weight in the market to pull the whole ETH VWAP back above 1 day back. So we have buyers hitting it hard in the opening, at the opening bell, taking it high. And now we're going to come back down and find out if these guys were right. We'll see more buyers before we range X lower. I don't know how much volume came in at that first move there. About 70,000 volume traded so far today, which isn't really a lot. I mean, Jesus, we had 200,000 trade overnight. So right now, sellers here. This squeeze here took out sellers from here, and then got into some of those overnight high sellers that were cleaned out when we. So we got the stops here. The next level of stops is up here and here. I don't think we're going to have a massive squeeze. It's going to take buyer participation, so we're going to have to see some positive cumulative delta to move this market up. I don't think we're going to rely on fuel until we get above the swings here and here. And that might just be, so if we can get buyers to come in and actively participate up to this level, that might be the fuel that pops us up to overnight high. I don't really have a volume like indicator. I just have like total volume. I should look at like just drop a unbalanced volume, or look at, I don't even know what like normal volume is. I just never pay attention to it. It doesn't really add anything. You know, I'm not going to do anything different because we're in a low volume day or high volume day. It's all kind of baked into the lines, you know. I actually prefer low volume days because when price gets out of whack on a low volume day, it returns to whack pretty quickly. So if I were long here, I think I would probably use like developing VWAP as a get out point. Maybe this edge right here. I don't know. I don't know. I feel like trading back to the middle. I think I want to be short from up here rather than long up to it. It doesn't feel very strong. Super balancy. I would love to be long from down here. Maybe even here. But I don't know. I feel like we're going to come take this out. But from a VWAP perspective, we're out of the developing upper edge here. At 28.5, we're above 1 day back, zeros above 1. A higher commitment from full session buyers than yesterday's full session buyers. So more bullish than bearish. Like those. I added a few more buttons to my medley up here. I'm up to 1760. I was at 9. I was up to here, so I had 1, 2, 3, 4, 80 more, 80 more VWAPs. I like these white ones, the white on black. They're really easy to see. Uh, Upper edge, stomp, and consolidation here. So this is looking good to the upside. This stomp above the edge. So buyers above the average price from the high buyers. But it's range expansion. So the average person is here. These people are here. They're buying at a premium, which isn't the end of the world if the market goes up. But if it doesn't go up, these are the first people to get crushed. And anytime you have balance, so this is balance right here between here and here. So balance from sellers here and buyers here, all coming in here. We have the potential to rotate on both sides. And that's what the whole idea of 1, 2, 3 is about, is identifying where balance is and then where we left and where we have the potential to go to if we go to the south side. So it's just, I'm just counting like, okay, if we're here, return to balance is here, range expansion is down here. So that's where the whole idea of 1, 2, 3 comes from. We got 1, 2, 3. And those are the areas I'll look to return to if whatever structure we're trading in fails. So see, 1, 2, 3. If this fails, then we should come to here. And we could actually, we could count this, like this, 1, 2, 3, and then if all of this comes together, we have 1, 2, 3, and then if all of this comes together, then it would be 1, 2, 2, 3. And so as these things merge, we can see we have micro and then a little less than micro and a little less than micro. and they all kind of merge together, and then eventually all of this comes together, and that becomes a 1, and then, you know, this becomes a 2, and then 3 is probably down here. And so we can kind of just like look at the way the VWAPs are merging together and interacting with each other to kind of determine like where the price checks are. If we get a lot of buyers and sellers coming together and these all go together, we can just call that the 1. And then we have to look like, okay, where's the next downside check? 2, and then 3. And 4 is down here. And this one and this one will probably never come together. They'll always stay separate because there's a lot of volume in each of them. But maybe we just count that as 2, and then this is 3. But it doesn't really matter, because when you're going to take, I'm not anyone else, but I'm going to, let's say I got short here on the breakdown of this. This is my first target, and I don't care what number I assign it. And then this is my second target. And then we have to fall out of this to get to here. Current sandbox, developing sandbox is here. Intermediate sandbox is here. So narrate this. The current developing sandbox is expanding range on yesterday's sandbox, which is what I call the intermediate sandbox. So all of this is above all of this. And once the developing sandbox breaks out from that intermediate sandbox completely, then we have like a full-on breakout. And again, none of that matters, because we can have a breakout that fails, and then you're back to VWAP and you're on the other side of it. But it's just a way of narrating the context. The way we came up to overnight high here is interesting. I don't know if we're going to find sellers at overnight high. We've had sellers already, like on 2 pokes up here. I don't know if we're going to find them again. I almost think we baked enough stops in here and here to really give us fuel to run this thing through. We'll see. I'm taking mine here at overnight high. I'm not going to try and slow roll this because I think sellers can come in here and smack this down. So I'm happy with that. So count them out. We have the 1, the breakout above, the 1, 2, and 3. I see these, but the fatties are here. So 1 is the upper edge, 2 is here, 3 is here. If this market loses 3, then we go to 4. Excuse me. And 4 might be 4 is a long opportunity back to the edge, but 4 may be the end of the road too. That might be saying that this is a broken structure here. So anytime we get to the 4, it's a long opportunity in the direction of the trend, but it might be that we got to 4 because the structure broke. So I always kind of carry that forward. And then as you're watching this, so we have the 1 here, the 2 here, and the 3 here. See what happens at 2. If 2 comes up and buys this, then we're not done. If 2 sells this, and I can't short this by any stretch, even though overnight high, I need to see a deeper pullback and a rejection of the edge. But I fully expect the potential for a rotation here at overnight high. Um, Tell me what you did on your chart. I can't look at it. Were you long to it or short from it? So new 1, new 2, new 3, and the 4 down here. So short, like a perfect short would be to come down to here, come up to here, reject the edge, and then mean revert. I don't know if we short this. It's like a suicide mission. Got all-time highs up here. So just counting the twos. 1, 2, 3. Humble, are you in YouTube? Yeah, see, no way, man. This thing's just going, it's going for overnight high, or P high. All buyers up here, all the way down to 34, green delta all the way up to high of day. So potential for them to get trapped, but I'm not seeing any sellers, I'm not seeing absorption, I'm not seeing sweeps. One, two, three, four, and we're starting to get into trend mode. Don't have to do anything with it, but just notice like how price reacts and interacts with the VWAPs, particularly in trend mode. Now we just took overnight high, and overnight high can be a retail seller extravaganza event. But when they're not selling overnight high, it's saying something important to me. So let's say that you're really bullish and you were like, fuck, I really want to get in this market, but I can't because I don't have a pullback. This right here is showing you the pullback opportunities. Count them out. 1, 2, 3. Now I know you're like, I can't get long here because there's no range, and there's not, but you can see the behavior. 1, 2, 3. So if you got long here, you could scale here and then go for higher. This has the potential to, we're starting to get a 1 here, 2 here, 3 here. I would say we're actually at a 1 because we've traded in here. So this is kind of a 1, and then 2 is going to be here, and 3 is going to be the fatty down here. So potential to pull back to here if we get through here. Let me clean this up a little bit. So we have the 1 here, the 2 here, and the 3 here. The market is coming down to here next, or it's coming up to here next. If we lose this, then we come to here. And that is out in front of the developing VWAP, which might be where we end up. And notice how developing VWAP is just a line on the chart. It doesn't have any ropes on it. The rope is here, and the rope is here. So if this gets bought up, it's 100% retail. I would say it's the chances of an algo buying this level would be like the most basic algo. I think the algos are actually tuned into more of what we're looking at here, 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 and here. And this is just a random line on the chart at this point. So retail will buy it. We'll see it get bought up. But if the algos sell this thing down to developing VWAP and retail buys it up, I think the actual price check is down here. And so that might set up a short back to here. That was hella sweep right there. Man, the sellers hit that hard. Sellers hit that hard. There was a big market. Man, was that a stop run? Who's got the stop and ice indicator? There's like, I don't know, 300 in one bubble. Somebody just marketed that thing in. Oh, we got data coming out. That's why. Book is thin. Watch your toes. It's Michigan sentiment, I think, coming out. The book is still thin, though, and the Michigan sentiment is done. Not sure why the liquidity pulled, but careful. And maybe the Michigan sentiment didn't print yet. It's supposed to be 9 o'clock. Yeah, consumer sentiment came in worse than expected. But the market barely twitched, aside from liquidity pulling and not coming back into the book yet. Humbo, are you in YouTube? So, excuse me, VWAP got bought up and now back on a trajectory to go take on those higher prices.
Aggressive buyers 109. Absorption. Sellers 94.
Don't even think about shorting this. This is a bull market. Look for all-time highs at 46, liquidity at 50. One, two, three. Next stop, 4. missed P high by 2 ticks. All right, back to 2. Kind of turning into 1 here. Watch that edge after this impulse down. We need to break up here. This if we lose this, we have a good chance of coming back to here. Want to see it break out of this edge and find new buyers above. There's fuel here, so we're going to see a little stop pop, and then there's fuel up here. That'll give us P high if we get up to it. The book is stacked pretty thick here. There we go. I'll watch for the stop pop up to P high, and no stat on P high, but it's 43%. So we should get a stop run into it. There we go. And then let's look and see what we get for a response here. If we keep up to all-time highs, we're just short of all-time highs. A couple of ticks, 46. Liquidity up at 50. And potential to just keep motoring on up. This thing can be irrationally strong for a long time. But the market right now has done its job. It expanded range on P high. All-time high makes sense, but it doesn't have to go there. And like it's missed it a couple times before in the same condition where we popped the top off, but we missed all-time high and then came back and got it another day. So there we go, new highs. And this thing can just keep going if buyers start getting rabid. The options market is coming into play here pretty hard. We're over a call wall, so they're hedging in the same direction as the market, which means the market makers are pushing this thing up too. Sell delta at 48 3/4. If that falls, we have the potential to come down to 45. There's the sellers on flat. Oh shit, 1, 2, 3. If we come into here, we'll make short work down to 3. And this is now 1, 2, whew, long way down here. I don't know, we could call this 3. We're not even going to get there. I should have just left it on. Buyers hitting it hard at 50. I don't know if there's an iceberg sitting up there or what. Somebody is absorbing 600 contracts because the buyers hit it hard.
Absorption. Sellers 95. Aggressive buyers 130.
So new all-time highs, and the motor's in. I don't even know what to target up here. 5,900, liquidity 60. Like just keep on. We're in trend mode. So we've broken from yesterday's high. We've broken from all-time highs. We continue to see aggressive buying in the market. It will end at some point. I don't know where. Optimal trade entries are at 3 in a trend. 1, 2, 3. That's where I'd like to get in. You may only be able to get 2. You may only be able to get here. But just look historically at what happens here. Price check, price check, price check, price check, price check, price check. This is frickin' insane. Insane price action. Aggressive buying. Just insane. So you gotta wait for a pullback somewhere if you're gonna try and hop into this. And then like it's gonna end at some point. So you're gonna have to manage any late entry you're gonna have to manage, or just stand aside. My MO is to wait for range back to here. So 55, 51. Like here, I can't do anything here. 53 to 55. By the time I get in, I'm probably in at 54. There's no range back to that edge. I really want to see a deeper pullback, but sometimes you don't get it. So like this is a deeper pullback. And then the other side is like as price comes down, so does this edge, and it makes scaling into the edge harder. And so then the alternative is you could look for a break above and a retest and scale into the swing high. Which I don't like either, because that's a breakout trade. But what's happening here is sellers are coming in, and then the market's breaking above and squeezing them out. Sellers are coming in, squeeze them out. Sellers are coming in, squeeze them out. And we can see where the squeeze starts. The late sellers are right there. So if those sellers stay in the market and we come above here, they're grist for the mill. And we could just keep doing this, until Goldman Sachs comes in and puts a 3,000 lot order in the way and exhausts the buyers. Got a 1, 2, 3. One gives us 2. 2 gives us 3, 3 gives us 4. That upper edge being sold right at the moment. Lots of liquidity in the book above price right now. People looking to get orders filled. I think that liquidity, if you're looking at Bookmap, I think that liquidity is actually my order, your order, like all the retail trying to get scaled in front of that high a day. That's that flickering. I don't think that's algo activity. I think that's actually just retail sell orders trying to get a fill. I got mine. Alright, I'm just going to leave this one at break even. I got in at 54 and my stop is at 52 and a half. That's break even on the trade. I'm going to let this thing run and just, I don't know, 5,900. I don't even know what to target. I think I'm going to go for that liquidity at 63 and call it good there. There's 300 lots up there. Fuck that, man. The way they're buying this thing up, I don't know. Pretty crazy though. 56 is the 2. Stop is at break even now on the second lot. I'll give it the 56 check. I like to see this thing just go. One more leg up. It's crazy though. God dang it. We are at the last long-standing liquidity in the book, the oldest liquidity, up here at 60. And watch your. I guess there's one more up above at 65. Pretty crazy price action. Sell delta hitting it hard at 58. 58 gives us 53 on a delta check. That's the 3. Easy mode here. If we get below 3, this is the impulse that's made from this impulse here. That's what we're seeing right there, those wide VWAPs. This is kind of the last stand for longs. I'm going to say at 53. If we don't see buyers here, then we can really start to motor down, and then the shorts will start piling in and start driving this thing down. 58 had some hard retail selling, and 58's about to get squeezed out here. So if we find buyers above high of day, all those sellers at 58 get wrecked with a capital W. One, two, three, 56. Six is now 2. Missed the new high of day on that little pop up there. Mindful of that. Want to Make sure it comes back and takes that. Now 54.25 is that. We got a combining here, so we want to see these highs get taken out. One tick the high, and we also have the 30-minute IB coming into play. Now the IB today is 72%. So if we sell this thing down, we have a 72% chance of returning to it. The 2 is now at 57. So if the 2 falls, 54.75 is kind of the last stand for the long side. No buyers at the high. Uh, 4.75. Watch the 2 here, watch the 2. No buyers here, puts the 3 on. And then easy mode down to 51 if we don't find buyers. At 54, 55. We've got a breakdown. So we got a high, and now we're putting in a low. It's that time of day. See if this gets bought up, or if we come to 3. Not convinced on that. Got to see this thing break up and put in another high here. I pulled my stop up underneath this poke down here. This is a potential short trigger. Not a short trigger that I'm going to take. Maybe wait for the impulse to come a little deeper. So like maybe down to here. And then reject that edge. I might be interested in a short. Right now I'm more looking to fill this space here, take out this high, and keep going. Got a 1. This is the 2 here on this edge. And that would be the 3. There we go, high of day. I don't even know, like where do we go here? 59? %, 60% of top step prop traders are short. Are they freaking nuts? I mean, I like, I'm all for like shorting, but let the thing show its cards. I would say get down here, get to the 3 check, and then reject the edge. That's my short. Yeah. 62. They are insane. No wonder top step is making money. it's funny, they look at that, you're looking at that, that percentage there, and everyone's looking at it, and they're looking for direction. They're looking for everyone to like agree. So they're like, well, 62% are short. I'm gonna get with them because they must be right. That is insane. One, two. I'm gonna get rid of two. I'm gonna go to a virgin level. We already checked this one, so we call this one, two, two, three. So as long as that holds, as long as this two holds, then I don't see any reason to short. or not two, sorry. One, two. God, I can say three, four.
90 seconds. Aggressive buyers 100.
Yeah, there's stop step right there.
95. Aggressive buyers.
Except for they're not even trading real data, are they? They're not in the market. They're just trading like a sim, right? $60.50, and well, I just took mine off in front of that liquidity at 65. I don't know. Like, I don't know how much I can hold. Oh my God, I was like the last person to get filled. Would that be funny if that was a high of me? I don't think it is, so. Okay, reset here, reset. So we got a 1 up here, we got a 2 here, we got a 3 here, we got a 4 here. I think 3 looks like a good location, 4 even better. We could do 5 down here on this rope right here. So hopefully you can see what I'm seeing. Like when I try and draw it out and identify what I'm looking at. Like I don't even know if you can. Like this is pretty clear to see, and this is clear. You know where the edge is. And I didn't draw this one because we've already been there, so that's a retest, which is fine. But then I'm looking at these, and those are just consolidations coming from here. So it's important to understand that these ropes, even though they originate right here, it isn't just the participants in here, it's the participants in here that are affecting that rope. So it's all baked in to this rope. So this is the anchor, this is the place where the anchor would be, but it's all of the participants in the market. So keep that in mind. Like don't get tunnel vision thinking that like, oh, we're just measuring, you know, the participants in this consolidation. That's actually from here to the right. And it's everyone baked in. So all the sentiment above this level, and it's going up. And so when we look at these and we count out the clicks, and we say 1, 2, 3, or 1, 2, 3, however you break it down, it's looking at the sentiment from these areas forward. And so this is where the last selling came in. And that's why the anchor, where the last selling came in. And that's why the anchor is contested back and forth, contested back and forth, contested back and forth. And in a trend, that's all that matters. So when we start stomping up like this and retesting these ropes, retesting these ropes, retesting these ropes, what we're doing is we're doing the same thing that Top Step is doing, really. You know, we're going up and we're looking at like how are the people, what are other people doing, you know? What are they, these people bought, and we come down to that level and we're looking and we're like, oh, 62% of people bought, I want to be with them. So we buy and we get in, and then we look, oh, what are these people doing? Oh, 82% of people bought here. Well, we want to be with them. So it's kind of the same thing. We're just actually seeing, instead of seeing, uh, you know, who's doing it wrong, we're actually seeing like what the market is doing. This is interesting here. We put in a high and failed to put in a high, and now we're below. So watch this. This could be a telling. And we have IB has just been set, so we can go up, pop the IB, and then retail is going to come in and try and puke this thing down. Don't be too quick to short. Let this thing set up. We're way up today, and the potential is to digest it or to return back to the middle. So just watch it for a second, and make sure we have an actual selling structure here. I'll be back in a second. I'm going to let this thing go.
Absorption. Sellers 140. Absorption. Sellers 100. Pressure sellers 100.
Yeah, I would say. I don't think they're wrong. I mean, at some point this thing stops going up. I just don't know if this is the moment where it stops. I mean, to me, this is all this is. We just did a 1-2 right now. So we're only to here. We haven't even fallen out of the 3. And we haven't had range expansion to the downside. So this is an unchecked consolidation here. And I don't even think that is a short yet. I don't know. Is that those stats that you're seeing there? Is that minis or micros? Minis. Okay, God, I can't believe people are like trading minis and like shorting. Like how long have they been shorting the top? Like what time did you post the first one? I don't have a timestamp on that. Oh, 9:20. So they've been shorting the top from 960 to 966. So 6 points. That's not the end of the world. This looks interesting to me. That might have been a short right there. This is definitely a short right here. Context-wise, out of context. Let's just watch the edge. We've got, notice the VWAPs are stepping down here. The consolidations are lower, and that's just because of this. But just keep an eye on it. What I want to see is price come down and expand range on the VWAPs to here, and I would actually prefer to come down and fill this space in here and maybe come to here and then retest and reject. This to me That's just a bull flag at this point. Now we're not going to go up forever, and I am acutely aware of that. But I'm not interested in being the first guy to get squeezed out here. Watch this edge here, and I didn't get involved in this. This is a good level though. Like if you were going to take along here, we bought it up once before and we bought it again. So long back to here and plenty of range to get scaled. And then if we can take these out, then we go higher. And if we get a rejection here, then we're next stop, the lower edge here, and then potentially down to here. But that would be a counter trend move, right? So if we see buying above here, we know that there's fuel stacked up. And once we get into this fuel, it's going to explode up into this fuel, which is going to explode up into this fuel. And then we're going to have all these breakout buyers up here that take it another leg higher. But if 62% of Top Step is shorting, I would imagine 62% of retail is shorting. Think about the numbers of people that are shorting this thing. That's just crazy. I should monetize this. My wife tells me that. She's like, you should just fucking sell this, Craig. Just like build a subscription and sell it. I'm like, I don't know. I suck at teaching people stuff. I hate to be that guy, but for the sake of building this channel up, if I can get you to smash that like button and sub if you haven't. Okay, here we go. The one is merging on a lower high, so notice that. One is merging on a lower high. So 1, 2, last checked, and then we're starting to really lose the the edges here. They're starting to just turn into like trends. So it's hard to see them, and you kind of have to go right and follow them back. So I'm going to say like where they're wide here, maybe this, if this is 1, this is 2, maybe 3 is down here. And it's more of, god dang it, it's more of a suggestion at this point. Like there's 1, 2, we're going to look for range expansion, so 2, and then easy mode 3. And that's what I want to see for the short, down to here. And then a rejection of the edge up top. If you look at this is actually maybe I'm so sorry about coughing in your ear, folks. This is actually maybe a good indicator too of sentiment. Look at how this edge here has dropped below this edge here. So sellers in this structure, and it's because it's lower, but sellers in this structure have a lower average than all the sellers in this structure. So we have sellers taking a deeper position. Now that's top step gets popped right here, and we go on to make a new high. But that's kind of pay attention to that edge, because we have two sets of stops in here now. We have stops from here, and we have stops from here. And so we have double fuel, but we also have double the potential for people to start doubling down. And retail can do a lot of damage, you know, like to your account. Like, you can't stand in the way of retail. They have a lot of power in the market. There's a lot of us out there. But they can also be wrong. And when this market needs to go up, you know, if Goldman Sachs wants their fill up here, all they have to do is pull these orders here, and the market's going to go up. And this is, look at this, dang it, man, here's another one. So this level's getting bought. So I would say this is an important level here right now. If this is 1, this is 2. And if 2 falls, then I would say get through this easy mode here down to 3. That's when the short idea would begin, is maybe if we come down into here. Right now we're making a series of lower highs. Still looks a little bit like a bull flag, but all good things come to an end. Oh, hey Tapish, I see you in here. Oh, thank you, sir. I mean, I have no illusion about being a YouTube star. I'm not pretty enough, but I would like to broaden my reach a little bit, and maybe see if I can help some other people, or at least offer them some ideas. Big consolidation up here, and this consolidation can break either way, but you can see all of the ropes that are coming in here, and to make this big fat one up here. So certainly a lot of sellers in the market, which equates to a lot of fuel, but we're making these lower lows, and now we're starting to see some lower lows and lower highs. This is the easy mode right here, in that below that edge. You can see how everything's starting to widen out. And I say easy mode with my tongue in my cheek, because it doesn't equate to easy. Here's that buy level. So are they still buying this? Are they still buying this? Are they still buying this? If not, then we have these price checks going down lower here. And you can still see the ropes are there. But once we stop once we get below this level here, now I'm looking at this saying, okay, this is ripe for a short potentially. I want to see what happens at this upper edge up here. And it's still, you know, the potential is still to be long back to that. That's really hard to, still weakness. Still weakness. We got a breakdown here. So I want to see the market move away from this and come up. And actually, I would prefer like no range expansion on that upper edge. So lower highs with no range expansion. So maybe come up into here for a short, but you're playing with fire here for sure, because if if Goldman Sachs wants to get filled up here, they aren't gonna let retail get in their way. They will get their fill, and the action, the fireworks start right here. So I always am willing to take a long back to an edge and then see what happens at the edge. But if that edge fails or fails to get taken out, then it really kind of changes the dynamic and sets up a short. Moto Cappy from the lab. I don't know that name, Moto Cappy. Was that your name all the time, or have you changed it recently? Oh, I got it. Mobo Cappy. Mobo Cappy. Copy that. I do know that name. All right, looks like that short may be on the table. So if the short is in play, where does it go? Anybody? Bueller? We have buyers out in front of VWAP here at 49. So maybe 50. And if we lose developing VWAP, a full pull back to developing, or a full session VWAP down at 41. And if we go, I gotta change. Jesus Christ, this thing's moving so fast. God dang it. Okay. So if developing fails, and if 50 fails, then we have developing. If 51, if 50 fails, we have developing. If developing fails, we have some buyers here at mid, and then we have 0-day back. And I think 0-day back makes really the most sense here. I'm going to go to a range bar so I can see a little bit more, because I lost my edge. Okay, there's the 1-day back edge. Okay, so this actually shows some pretty nice consolidations clean. They're ugly, and I hate like the jiggy jagginess of this, but this is really nice to see consolidation. So here's a big price check. If we lose this, then developing, and we can see retail step in um, at developing. I'm going to go down a little time. I'm going to go down a little bit in range. Let's try $1.25. The lower the range, the higher the resolution. So it's going to show you more detail. The higher the range, the more you can see, the bigger picture you can see, but the less detail. Thanks for stopping in, Motorboat Captain. Appreciate it. And everyone bang that like button, unless you bang the dislike button, and that's cool too. Watch the droops here, so you can see the sellers now. We're stepping down. The VWAPs are stepping down, stepping down, stepping down, and of course that equates to fuel to the upside. But those steps down are telling you the sentiment of these buyers. And obviously the market's going down, the VWAPs are going to go down, but it also is showing you where the price checks are up above. So if we go to here, this is up next. If we can't get there, then return to here and lower prices. And so you can use this as a price ladder. And maybe you say, I'm only interested in here, or I'm only interested in targeting here. Like you can see going forward, like where the vulnerability of participants in the market are. So I did take the short here on the breakdown here, and now we've returned here, and this becomes an over-under to the next click down. And I'm going to say developing VWAP is a line. This is the actual price check. We could see buyers come in here at developing, retail buyers, but the price check in my view of this all is down at 45, and then below developing VWAP, of course, sets up a return to 0-day back. But I think I would look for maybe a bounce off of the 45 half level here if we don't get it at developing. Developing is probably the safe money play. Thanks for stopping in, Lycopene. Sorry, buddy. Let's see here. So below this level now, think of the breakdown, retest, rejection, potential. And I don't really like trading continuation. That's a continuation of this move. I would prefer to take it at an edge. But the potential is to break below this, where we had all these buyers come in and reject it. And if we break above it, then it suggests a potential return to here. So if you're managing a short from up here, this is the price check where this is the over under to higher prices. And if we find buyers above here, then we might go up to all-time highs. If we have sellers here, then we'd be looking to retest this lower edge. So from here to here for continuation lower. And you can play it either way. You can try and long this back to here and hope for higher, or you could short this back to here, hope for lower. But we know where the edges are, and we can kind of stalk those areas. And if we don't go up from here to the edge, what is that saying about the weakness in the market, or the relative weakness relative to the leg that we just traded in? Yeah, I'm not gonna lie. I kind of hate these the way these things print. I really prefer the tick charts because they look so much nicer. Like this looks so much nicer, but it is so hard to like see consolidations in this. And when you go to just like the raw range chart, this is a $1 range bar but a tick bar. And if I go to a $1 range bar for range bars, a $1 range bar for range bars, like I can see the consolidations a lot better. Like this rope didn't even exist on the tick chart where it's really defined here. And then you can see the consolidations down here really clearly. So easy mode down to here. But these are hard to look at. Okay, so here, this is what I was talking about. If you wanted to be long here, that's your target. If you want to be short, weakness here, your scale would be down here. If we break above here, that takes the short off and puts continuation to these swings on the table. So it's really going to depend. This is critical path. We either go up here or down here. But we have if we're going to short this thing, we have a scale target. And it's not this. It's the edge that's being created right here. I mean, it's whatever you want it to be. But in my world, if I'm going to short this, my scale is going to be here. Because of this edge here, not because of this edge. And like I said, I'm short already from here. Excuse me. And so my stop is above this structure right here because this is the over-under to higher or lower. And like all of those top step traders that were shorting up here, they actually have better position because they can put their stop up here. And I don't know if we come back to here. Maybe we do, maybe we don't. Watch this edge. I want to see for a short, I want to see it rejected. I don't even want to see this. I want to see that edge completely respected and sellers to come in and double down on that edge. So right now we just had a VWAP migration right up to that edge. And I find that very interesting because I know like T-Lab is looking at that edge and they're saying VWAP migration, and this is a complete breakout level right here. If in order to get above there, you have to rely on a squeeze to get above there. And so I know there's like the VWAP migration by, like kind of the rubber stamp by the VWAP migration. I just don't know if that's a trade I would take because of all the selling pressure right here. You're not really relying on buyers for that to fulfill. You're relying on a squeeze to happen. And I know that because in order to get above here, we have to have new buyers above here. Otherwise, we're not going up. And that's coupled with a squeeze. And that could happen, but I just...
Aggressive sellers 100.
So scale down there, and it's really tight. And then the next level is going to be 52. So maybe you didn't take the short, but maybe you managed the short, kind of with those ideas. And, you know, here's another long opportunity back to that edge. And we'll probably see some buyers step in and try and take it up to the edge. So it's a little deceptive because the chart is, you know, there's only 59 to 55, 4 points of range here. So like if you didn't get your short off here, you're going to have a hard time scaling into that lower edge. But if you did, congratulations, and then the next area I would look for is to take out the swing and expand range to the downside. And there's always a potential that the market's done pulling back and that this is actually a buy level for a continuation. Your scale would be here, and we're splitting hairs now. Like say you bought 55, you've got to scale 57.5 because this edge here has the potential to sell it down in the context of this pullback. But you can measure it, and that's kind of my point, is like you don't have to like guess. You don't have to like say, oh, well, you know, I'm going to take a chance on this edge, you know, not selling down, and I'm going to take the trade up to here. Like, you know that this, if this price check fails, we're not going to here. And so like you're trading against these sellers here, and that's what's in this line, in this edge. If they are right in they're with these folks here and these guys are right and they double down here, then we're going to keep going lower. If we come above here, these guys start to get squeezed out, and then we can see that.
Aggressive buyers 104. Absorption. Sellers 95.
So watch that edge here. Potential to run these stops out here, up into here, and if they double down and then we fall out of this lower edge, then we'd be back onto to take on the swing here. The short is here for me, not here. This microstructure, I want to short against a higher time frame. So this would be a higher time frame than this structure. This is the kind of trade I made last year. These inside trades, I'm really looking for these outside trades. I like this clean rejection here. Doesn't mean we're not done to the upside, but I definitely, you know, if you take this, you have a scale opportunity, and you can find out if you're right. And that's what it's all about for me. Buyers here, finding support. So we have sellers from this edge and buyers from this edge baked in between here and here. That's the buying, that's the selling. We're currently trading in here, and we're either going to break up or we're going to break down out of this structure. And you can see we have an edge right here. Maybe you can't see it. I can see it where they're wider here, and then they start to get tight right in here. and then they really start to get tight down here. So we filled, I talked about easy mode, we filled the easy mode, and if we're going to go up, this level here might be a level to take it up, but there's a lot of sellers up in here that are either going to be fuel or they're going to be right, so we just keep an eye on this edge. That's kind of the over-under for higher prices. And we're going to fall out of this one way or the other, so we're either going to fall out here or we're going to fall out here. And then there's another edge here from back here. So that's a sandbox too, of a different time frame. And so when we fall out of this, if that's the case, we're also falling out of this. And so longs from here get squeezed out, and longs from here get squeezed out simultaneously. And the same thing happens on the upside. Shorts from here get squeezed out into shorts from here if we get above here. So there's fuel stacked up here, and there's fuel stacked up down here. So now layer that in with the context. Developing context up, intermediate context up, higher time frame up, historic time frame up, micro time frame down. That's the only time frame that's down, is this leg right here. Every other market, every other time frame in the entire history of the market is up, and this leg is down. And so think about the idea of shorting this, how like really ludicrous it is. 62% of retail traders were shorting it up here. They didn't even wait for like this or this or this. They were shorting it right at the all-time highs. And it's kind of crazy when you think about it, because like the only selling we have in the entire history of the stock market, all the way back to its inception right now, is this area right here. Otherwise, the market has been long on every other occasion. It's like, why are we even thinking about a short here? Stops above here and a run to all-time high. Sellers here. Bring it back down to here. But we need buyers up here plus stops to get there. Can't do it on stops alone. So if people are currently selling, we're not going to get that. We need buyer participation. Watch this edge down here. This gives us this. If it doesn't give us this, then we come back up and try and do this. And inside of all of that price action, we have buyers at this edge, buyers at this edge, meeting sellers at this. Hey, how you doing, right? Buyers meet sellers. Expanding range. Big pile of buyers coming in here, starts feeding on those stops. But we got to see active buyers. It can't just be like a couple people. We need to see retail like flip around. So this is a good time to like watch that top step number. What are they doing? Did they flip long, or are they still short? Okay, Okay, so they flipped long. 10% of them flipped long, which is probably smart. They got with the trend, or they stopped shorting it anyway. So the breakout on this really needs to go up and click that all-time high to like change anything. If it comes up here and comes back underneath this edge, it still puts this edge back on the table. So this is just range expansion on this, and we really need to see like additional buying come in to like take out that swing and get into this swing. Otherwise, this is just a short opportunity back to the lower edge, and then look for continuation down in the current context. Nothing's changed here. If we don't get the stops here and don't get the buying, which it doesn't look like we did, then this is just mean reverting into here. And I think VPOC's up here somewhere, so there's the potential for that. So if you were to get long, and even I don't have a VPOC on here. What is that? 58 and a half. So VPOC is right in there somewhere. If you were to get long here, you could use this exact setup here to take your long right there. You could use this setup to take your long right there and target VPOC. If you're trading that like mean reversion to VPOC strategy. And you could take a short back to VPOC if that's what you were looking at. But it's all about that rejection of the edge. And so the way that I look at these edges is I want to see some space between the lower edge and price, so that if I'm going to take a short here, I can scale right here. If I'm going to take a long here, I want to scale in front of this. And so I need to have some range. I can't just take the short. Like even let's say you took this long here, you have range back to get the scale here, and then you can decide. You can see what the market's going to do, after that. So you can decide if you have range. You can see it. So in this short, if you were going to take this short here, you can see where the edge is. It's right here, down at 58.5, which is VPOC. But that's coming from this edge here. And then the next edge from down here is this one right here at 57. So if you were going to short this down, you would want to be scaled in front of that. But we also have this stomp here to consider. So if you've been around for long enough, breakout, retest is what I call a stomp. You're stomping on it. And so this stomp has the potential to bring you back to the swing and then continue a move higher. And I talk about that in regards to like a higher time frame edge or a developing time frame edge, which is what this is. This is the developing time frame's upper edge. And so we've broken out of the edge, stomped it, and then if we have new buyers, we can join in with the new buyers to continue squeezing out everyone from here. New sellers come in, and it puts the stomp back on the table. If the stomp fails, then the lower edge, and if the lower edge fails, then it's just a series of price checks. So here's our 1, here's our 2, and here's our 3. If this fails, we go to 2. 2 is either going to give us 1 or it's going to give us 3. In this case, it gave us 1. And this is all really micro, but you can do this on a bigger picture too. And more importantly, you can do this to get scaled. You can look at it in this way to just get half your position off and give you a chance to start filling some of the rest of your position out. Obviously, this is excuse me, like a 2-point range right here, and pretty hard to work in. But you can do it. You can do it in the bigger picture. So if we have our 1, 2, 3, and we look at the range, this is 59, this is 57, so it's only 2 points down to here. But from 1 at 61 down to here at 57, it's 4 points. So if that's your short, you're shorting for a 4-point move down to this lower edge. I don't know if that's the right trade. I'm just using a short as an example. You could say the same thing here. If your long is down here, your scale is here. So your entry is at 55 and a half. Your scale is at 57 and a half. Well, that's pretty tight. But you also know that this is where the squeeze starts back to here. So we have long, scale, target, breakout, hold for continuation, or just be done. And you can do that like literally in any time frame. And we're looking at, that's what we're looking at here is time frames. Like this consolidation is a fractal. This consolidation is a fractal. This consolidation is a fractal. And it's all a fractal of this fractal and this fractal. So we're trading these fractals inside of this fractal. And now once we come down here and we find this level right here and accept it, now we're trading this fractal inside of this fractal, if that makes sense. If you would please hit that like button and help me grow this channel a little bit. So right now, developing time frame is in a pullback. Higher time frames up, intermediate time frames up, historic time frames up. Micro time frame is up in the context of this pullback on the developing time frame. Might be done to the all-time highs for today. This might be a short. I don't know. Like I was saying a minute ago, like we just put in the all-time highs in the historical market, so it may very well be that their shorting would be kind of crazy at this point, right? Like we're literally 7 points off of all-time highs, and here we are, thinking about a short. That might be just insane. So maybe the thing to do is swing to the long side. But all good things come to an end, and this market is going to rotate back down because that's the nature of the market. And when it rotates back down, it's going to reject an edge. So here's an edge. We just rejected it. And it's going to reject this lower edge and fall out of it. Now we got a lower edge right here that we identified from buyers before. That was actually bought up here. But we did have range expansion on it. So if I was shorting this, it would be back to this edge, and then here, and then hold for continuation. If I'm taking a long, it's buying this or this, back to here, and holding for continuation. And this comes down to like having a higher time frame contextual plan. And if your contextual plan is to take a long and you don't see a long opportunity, then you just have to sit and wait. And that might come down here off of the 47. So if you're not interested in shorting back to the 47, then you just sit on your hands and wait until you come into some ropes that support an upside move. So we had some ropes that potentially support an upside move here. We traded up. We failed to take out the high. We range X'd on that upper edge, but now we've come underneath this area here. So do the price check with me. Reject this edge, puts this edge. Reject this edge, puts this edge. Reject this edge, puts this edge. Reject this edge, puts developing on. Buyers here, puts a retest of this edge. Buyers here, puts a retest of this edge. Buyers here, starts squeezing. So if you were going to short up here, scale, target, punt. And the scale here is because there's no reason why we would come to here, because if the market is long, we would find buyers at this edge, and then we'd be buying here, scaling here, and holding for continuation higher. So we're seeing who's vulnerable and who's in the money and where they might likely double down or not. And when they do double down, then we have an idea of where it might go. And you can see this happen over and over in the market when you view VWAPs. So like contextually, all those time frames are up, but if the day is done going up, the potential is to pull back into a level to look for like buyers. If the algorithm has distributed all of the liquidity that it accumulated earlier, now it's going to go down and its orders are all down here somewhere. So where would they be? They would be where the liquidity is. So if this is easy mode to get to here, that means these are weak hands, and they're weak hands because they bought in this move up. The committed hands are the ones that bought before the RTH open, and we know it's before because they're all underneath developing VWAP. And I say that they're underneath it today. On other days, they might be above it. It depends if they bought it in the ETH or if they sold it in the ETH. But today they're underneath it, and because we bought developing VWAP, developing session bought it up, we know that these are actually participants from last night who are notoriously what? Weak, right? Like, so all those people that position long, they're not the volume, they're not like strong hands. So like I think of strong hands as 401k, mutual funds, like people that are investors. Those are the strong hands. They come in at market on open, and when they come in, we'll see VWAPs like this on top of the developing edge or just below it. So I know that these guys came in pre-market. This VWAP here is probably the last consolidation before the market opened, where a lot of participants came in. So I think the potential, if we come down here, is sure to come down to developing, but I think if the algo needs liquidity, that it's actually going to come down to here, because this is where the average schmuck is from the ETH. And if it really needs liquidity, then I think it's going to come down to here, because that's going to clean out all of the ETH, and the ETH is notoriously weak-handed. And so if their average position's in here and it comes all the way down to here, it doesn't have to go to overnight low to clean out all the stops, because the average position from overnight is right here at 0 day at the full session VWAP. And so that's why I think you see a lot of times this getting bought up. Now, something to consider is like, yeah, this is the line and this is overnight VWAP, but this is a fat rope of volume, and this has more volume in it than the low. So the market may come down to here and find enough liquidity here. If it doesn't, then this is the next check down. So that's kind of how I view it. If the algo bought it up and accumulated a short position and now it's redistributing that short position down, if that's what's happening, then it's going to shake out its orders down to here and get the market down to wherever it wants to buy. And it's going to buy where there's liquidity. So maybe it's going to buy here, or maybe it's going to use this to get rid of its short position and reaccumulate a long position, or not. And we don't even know if it's distributed its long position yet. It may still be, this might just be retail screwing around, and the algo may have still have a long position that it's looking to distribute after it pushes above all-time highs. So just, we don't know. We can only like trade the chart in front of us, and right now we're seeing pullback short, buyers coming in, range expansion, failure to take out highs, pull back to this buy zone here, and now we have this potential area here where we have fuel here and we have fuel here. And so if we find sellers here, that's the first area, and this is where retail might buy it up, and this is the liquidity here where I would expect an algo to go to find liquidity. So I would imagine there's a shit ton of resting orders at 46 3/4 waiting to get filled. And then after that, we can add some more VWAPs to our chart, or increase the bars of our chart to see where the next liquidity is. But my guess is it's down at 1 day back. Down here is the next real fat dose of liquidity. So I have all my VWAPs that I have on this chart. I can turn on some different colored ones, but they're a little bit harder to see. So I'll turn these on. You'll have to squint to see them. Is that this one? So they're a little bit harder to see, but the next, if 0 day back falls, then the next liquidity is down here at 58.37, and that is in front of 1 day back, and it's in front of 1 day back because, and I would bet that it's because yesterday got bought up, and so this is, I would imagine that yesterday's developing VWAP is probably right here. And so if we come down to developing VWAP, of course it would be contextually a long to buy back to the upper edge and see if we break out and go to all-time highs. But that would be retail there. I think the price check is actually here. And so if retail buys up developing VWAP, and we're going to find out, I think, today, if they buy it up, I see them getting crushed and price actually coming down to 47 before it goes up. So we'll see what happens. I'm going to take a little break here.
auction. Buyers 92.
So we kind of settled into a balance up here around VPOC, and you can see all the volume that's traded at VPOC and who's positioned where. So VPOC is somewhere in the middle here at 58.5, I think. It's now 60, and so the price is rotating around. The low-hanging fruit on the day is probably done to the upside. This is maybe a good time to just settle in and maybe work on some stats or something. So you can certainly take trades back to the middle from either side here. Obviously the market's skewed to the upside, but I think, you know, after you capture a move like this trading for, you know, 5 points in here kind of is a little anticlimactic. Does anyone have a volume profile that can see what volume was traded at 58.36 this morning? I guess I can look at Bookmap. So prior to, oh, what's going on here? That's weird. This looks like this price action here looks really weird, like a barcode. 36. That was just a massive back and forth. Super algorithmic. Algorithmic. It's crazy. I feel like the market just stopped. Like it shut off. It's a very different market than this.
Buyers 84.
And for once in my life, I have nothing to add. two efforts to range expand on that upper edge, and now potential to range expand on the lower edge. See if this edge here holds where we range expanded and then came back inside here. This micro edge comes to here, range expansion here. If you can see the edge right there, would be what I would say is the next downside check. And either you're short here or you're long here. And I don't have a position or a preference, but just areas that I'm looking at. It's that same level. Bought, 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 buying. So the current sandbox, the current edges of the sandbox, barring range expansion, are here and here. So in a mean reversion setup, I would be interested in selling range expansion back to the middle or buying range expansion back to the middle. This I wouldn't be interested in. This I wouldn't really be interested in. This I wouldn't really be interested in. So the only thing in the context would probably be if we dip down below here, and I'd be interested in taking that long. And we could be done. So there's all of these trades have the potential to stop at that edge there, or stop at this edge here. Yeah, I was muted. Um, I don't know. I think we're kind of coming into a point where shorts are starting to look good. I took a short, um, didn't go anywhere, and I'm currently flat. But I think you can't win if you don't play, and so my theory is you can take a trade and still be wrong on the context. But if you get the scale, it doesn't really matter. And so everything I do is about, can I get a scale? And if I can get the scale, then I'll take my shot. If you took a short from uh, the high of day, rejection here, which would have been pretty darn early, I took mine here on this one. Um, so obviously I'm not like out of the way. I would have got popped out here. I actually got popped out here because I didn't have a lot of conviction in it. But I took my short, I got my scale, and then came down into this and found buyers and said, okay, I'm done. Uh, I think if you had taken a short here, you're in good shape. I don't know if we're coming back to all-time highs. The other day, yesterday, um, we came back to all-time highs, and I'm going to turn my mic down. It looks like it's hot. We came back to all-time highs the other day, and that really surprised me. And we put in an all-time high and then curled back around. And today looks kind of like it might do the same thing. Uh, come down. We came into balance. Uh, my thought is though Friday, profit taking, global instability, but we do have inflation that's making this market worth more on paper anyway. And so I don't know who's selling. I guess I would, if I bought the low today, I'd probably be willing to hold it too from a 401k perspective, not a day trading perspective. But I don't think the short's a wrong-headed idea. I think this short was contextually a worthwhile trade, counter trend, but trends end. We just put in all-time highs. We just put in a huge day, and the potential to come back and test developing VWAP is still real. I mean, that happens like nearly every day. So I say if you have range and you have a scale, it is not wrong. The trade is not wrong. And I've said it many times before, if you if you form a thesis every day and you trade your thesis, you can make money even when your thesis is not correct. Oh, turn the mic up a little bit. Yep. Okay, so I'm going to turn it up and you tell me if it's too loud because I saw it getting close to the yellow range. So how is that? Is that any better? Any worse? Better? Is it too hot or is it pretty good? I'll turn it up a little bit, just like that. So if it's quiet, let me know. Yeah. So I think if you form a thesis, your thesis can be wrong, but if you have a plan, so let's say you took the short here on this leg down, and you said, well, I understand that this is the next target, and it's an over under to here, and it doesn't go there, and you take the stop when it breaks above there. I think you had a successful trade, and that trade would have netted you, 10 points. So Like that's completely counter trend. It's completely the wrong direction according to like everything that's happening in the market, but you're still able to make money. And if you understand the context and where the price checks are coming in, you can do pretty well even when you're wrong. And so that's why I think every day we should start out with making a thesis, trading the thesis when it shows up, and then looking back at the end of the day and see, was our thesis correct, and really work on the context. So I think higher time frame context is everything. It's everything. Like you have to understand like what the potentials are and when the context has changed. And I think that's a lot of what people struggle with. I do my contextual thinking off of really two charts. I start with this one, and this one's really easy. I say, here we are in the highest time frame, and we've broken out from this upper edge. If we lose that edge in the highest time frame, that's the price check. If we lose that, that's the price check. And I call that the 1, 2, 3 B, the 1, 2, 3 breakout. So we're currently breaking out. This is the 1, this is the 2, this is the 3. If we lose 1, 2 is the price check. 2 either gives us return to 1 or 3. I do that on the historical chart. And then I open up this, which is just a historical chart with smaller bars. The same VWAPs apply. So if you look at the consolidations that I have on this chart, we have this consolidation here, this consolidation here, and then the 3 is down here. So on the higher time frame chart, that's the 1, that's the 2, and this is the breakout. So we have broken out from that historic upper edge, and we did that 1, 2, 3, 4, 5 days ago. And so by virtue of being above this edge, that makes me long biased in that historic time frame. We are breaking out above the upper edge. If we came below 1, I would say, okay, potential to be short biased back to 2 in that historic time frame. And we have to come down through 7, 8, maybe 9 days of VWAPs to get to 1. So that's a long time to be like only long side biased, right? And there's certainly opportunity to be short biased in the market, but just from a higher time frame perspective, that makes the most sense. And so then once I kind of sort that out, I break the day up into I break the VWAPs up into thematic ideas. So 0 day back is the full session VWAP. That's the anchor from today at ETH Open, and 1 day back is the anchor from yesterday at ETH Open. So those are purple and blue. And if those are the only 2 VWAPs you had on your chart, the way that I would look at it, the way that I would look at it is I would say, if we're above 1, I'm long biased, back to 0. If we're below 1, I'm short biased, back to 2. If we're above 0, I'm long biased, back to developing. If we're above developing, I'm long biased for the breakout. If we're below developing, I'm short biased, back to 0, but counter trend. Below 0, short bias back to 1, but counter trend. Below 1, I come into the price ladder in the higher time frame. So if you look at the difference in these colored VWAPs here, these are all short-term VWAPs. So we have today's, yesterday's, 2 days ago, 3 days ago, 4 days ago, 5, 6 days ago, 7, and I think there's like an 8, 9, and 10 here, and that's coming up from. I'm just gonna change the time frame so we can see more of the chart. Those VWAPs are coming up from this consolidation here. So this is what's making this higher time frame lower edge. So I would classify this from 0 to here as higher time frame, and I would classify this from here to here, from this rope here and these gray ropes here as historic time frame. That's the same as this rope here and this rope here. So this is the historic time frame sandbox, and above that is the higher time frame sandbox. And then breaking that down a step further, I would say that everything between 0 and 1 is the intermediate time frame. So that's just kind of a generic way of looking at those time frames. But I would say that's the intermediate time frame between 0 and 1. And I would actually use VWAPs like this to better define them. So sometimes the intermediate time frame starts down here rather than right at 0. But if you just want to like a generic idea of what the intermediate time frame is, 0 and 1 are a good model for that. And why 0 and 1? Because it's showing you basically yesterday's price window, like all of the price window, and that's at the open. So right now, this isn't the intermediate time frame anymore. The intermediate time frame is probably more like down here because the day is well underway. Remember our downside checks here as this thing melts down, and where where the market botted up last time and where the range expansion is. So right there, and I'm looking at this right here is the next downside click. And if we lose that, then I say developing VWAP may be on deck. So then after the intermediate time frame, which is generically between here and here, if we lose 1, and this is kind of my over-under for a deeper pullback, I'm willing to buy 1 as kind of a rubber stamp move back to 0. If we lose 1, then I'll immediately start targeting 2, and I'll be looking for a deeper pullback, and I call that getting into the higher time frame price ladder. So if you remember, I said the higher time frame was from here to here. This is the higher time frame price ladder, and so the way I narrate this is I say if we lose 1, it puts 2 on. 2 either gives us back to 1 or back to 3. So if we get 3, we just took a step down on the ladder. Hands are here, feet are here, the middle's here. If we lose 3, we come back to 4. If buyers come in, we go back to 2. So if we go back to 4, our feet come down and our hands come down. And this is our body. 4, either back to 3 or back to 5. If we go to 5, feet come down, hands come down, body's here. Think of a guy climbing a ladder, right? The market at this point, once we lose 1, I think is looking for buyers. And so then I'm going to go back in time and I'm going to say, where did buyers come in last time? And so yesterday, buyers came in right here. And when I say buyers came in, it's not like a flood of buyers came in and pushed this up and prevented it from going lower, but the selling ended right here. So if the selling ends, that's kind of the equivalent of buyers coming in. That's how I look at that. And so if buyers came in here, then I'm going to look for that same VWAP level to get bought up again. And in the ETH today, we had that buy level get bought up, which told me that this buy level was valid and that I wanted to be long today back to zero. So when the market opened, and this happened, this move down here happened at like 3 o'clock in the morning, but I was aware of it. When the market opened, I was looking, or when I started trading, my first trade was long back to the zero, and my second trade was long back to the zero. And I was looking at the support of 2 days ago's VWAP here, but particularly right here. So just like I said, if 0 gives us 1, 1 gives us 2. And I saw that 0 and 1 were stacked together, and we talked about this morning. I said when you have VWAPs that are overlapping like that, so 0 days back and 1 day back are stacked, then the next one we look at is 2 days back, and think of that as like a micro composite VPOC. When you have those two VWAPs stacked together, that's the equivalent of 2 days of balance. And so my thesis was, we made a stand here at where I expected the potential for buyers, and we talked about this yesterday. And one of the people in this room right now took a fantastic fucking trade off of this and basically caught the falling knife and traded it back to the 1 day back. And it was a beautiful trade. Coming down in ETH, not retesting this, and then coming back up to the 2 day back, said the buyers here were valid, and then it was, okay, we're at 2 days back. 2 days back gives us a retest of this or retest of 0. And so I went for a retest, a mean reversion trade back to the 1-0 stack. And I took a couple of those this morning and was actually positioned into the open already for the move that happened. And so then I was able to make adds into that open. At one point this morning, I didn't have a trade on. I had taken all my lots off, and I was looking for add potentials. And I don't know, some folks weren't here at that point, but that's how I developed my theme this morning. I was very aware that we had put in an all-time high, and that the potential on a Friday, a lot of times, is to start climbing down this price ladder. But when the market came in, and bought up the 2 day back and went to 0, and had bought up the yesterday's full developing session VWAP here, rejected lower prices here, came back to here, then it was just kind of scalps back to 0 to get a position that I was averaged down in. We are at that location now where that liquidity is, and we're moving through that liquidity at 83. So if the market keeps mowing down, the next check down is developing VWAP. If we see a bounce here at this liquidity, we could see a rotation off of it. So that everything after this for me is a punt, and developing VWAP is just a line on the chart right now until we get down to here. So the next check for me is 48.50, and then below that it puts 0 on. And you can see a lot of liquidity stacked in front of, beneath developing VWAP right now at 50. Sorry, I just changed gears, but um, the potential, I think we could see retail buying at 50 and a half, developing VWAP, and then I think the real price check then is down at 48 and a half, and that's where I would be targeting, below 48 and a half, and then it's all the way down to 0-day back. And don't let the different widths here, they're different. It's a different set of VWAPs, so they're not the same. But the next price check below that is all the way down here at 37 if we lose 0-day back. And so, and 0-day back is the over-under. So remember what I was saying. My view of the VWAPs are is if we lose developing, it suggests 0. 0 either back to developing, or if we lose 0, then back to the next price check lower, which is technically 1, but I look at all this liquidity in front of 1-day back, and I want to be front running that. So 38.75 versus 34, and I'll take my chances on that last 4 points. So, sorry to get excited. So I saw this, and then it was scalps back to here, scalps back to here, scalps back to here, and holding for a move up. And then once this move started, then it was pretty clear to me that we were going to take all-time high at some point today. I said this is a trend. We're in trend mode, and I'll talk about that in a second. So that's how I developed my thesis off of this chart, and it's all got to do with the 0-day back and the 1-day back. And the 1-day back is really the over-under for bullishness on the day or bearishness on the day. I'm willing to buy 1-day back to 0, like on most days, but there has to be range. It can't just be like if they're stacked together, then it has to be 2 to 0, 1. It can't be like I can't take a trade from 0 to 1 here. There's no range. So there has to be range in between those two. And if they're stacked, if they're within like 5 or 10 points of each other, then I'm going to take either 2 up to them or 2 down to them if 2's above. And that's going to depend on what previous day's trading has occurred. So like in a bullish market, 0 is usually above 1 and 1 is usually above 2. But when they're mixed, when we're in balance, you'll have a weird order, like you might have 1 3 2 or 1 2 1 2 3 or whatever. They might be completely out of sync. So that's kind of how I look at my day, and you'll see it if I post in the Discord room. I try to post, like a thesis every day. Like if I'm streaming, it's really hard to like screenshot things throughout the day, but that's what I try to do and try to keep that narrative alive, so that I'm kind of tuned into like where we are in the space-time continual. Okay, so that's it. That's how I sort out the day. That's how I look at price checks. That's how I look at the market breaking down. I'm typically looking if we come under developing, if we put in a high like this, if we click a level, then I start targeting developing VWAP with a short theme. If we get below developing VWAP, then it's targeting 0. If we get below 0, then it's targeting 1. If we get below 1, then I'm full on bearish and I'm looking to potentially expand range and start clicking levels in the price ladder, the higher time frame price ladder. If we fall out of the higher time price ladder here, that's a full mean reversion to this higher time, or this historic time frame upper edge. If we fall under that, then the historic time frame, the higher time frame is bearish, and the historic time frame is neutral. Okay, if we come down to the 2, anywhere between here and here, I would say we are in like a decent correction territory coming down to here. Historic time frame at that point would still be theoretically bullish, but the higher time frame would be bearish, not neutral. And then developing days would probably be bearish at that point too. But that's all just part of the narrative, and it all has to do with where we are with 0 and 1. And my trades typically are leapfrog from, I'm going to drop some edges on here. So the upper edge, wow, I just grabbed the wrong ones. Try these. So if this upper edge is selling, I sell edge to developing. If developing falls, developing to 0. If 0 falls, 0 to 1. If 1 falls, 1 to 2. If 2 falls, 2 to this buy level or lack of seller level here, and then I look for range X. Once we get range expansion, then I'm actually, even though we're below 1, I think of that as the market having done its job. The algorithm has got into new liquidity, and I say algorithm like the market has got into new liquidity down at 3 days ago VWAP, and I look for the potential off of range expansion to return back to 0, but then it has to get through. So say we range expand down to 3, it has to get through here. Now it's important to know which way these participants were. So if they're buyers at yesterday's RTH VWAP, you're not fighting them, you're with them if you're buying down here. If they're buyers here, you're not fighting them, you're with them. So you have to kind of keep in mind like what the market did in prior days when you come up to a VWAP. It's only resistance if the predominant theme of that day was selling and you're trying to buy it. So it's important to know what happened in the days before, and you can see that by doing one of two things. You can drop a VWAP, which is what I did here. Right here. This VWAP here is actually, this is the 3-day back full session. This is the 3-day back retail session, RTH session, and I know that there were buyers because the VWAP is above the full session. If there were sellers that day, the VWAP would be below it. And so if you know what direction people were trading, look at, we got a retail bounce here and we went down to 49. So range expanded below developing with VWAP, and remember what I said? I think I said 48.5. I was off, but look at where we went, right to that where the fatties started, right there. So the real volume is here. The consolidation of volume starts right here, and that's where we're getting the response off of. And so that's why I said retail is going to buy it, and then it's probably going to take them out. Now this doesn't mean that we're done going down. This is just a price check. If the market needs liquidity, there's a metric ton of liquidity right here in these fatties. So if it comes down to here, it's telling me that it needs the liquidity, and it's making it come down to here. Imagine if you had an unlimited amount of money in your account, like how you could manipulate this market. And so anyone that tells you that the market isn't being manipulated is just like I think they're not really paying attention. Like these banks have literally trillions of dollars, and what would it take to juice this market enough to push it down into the liquidity that you need to get in order to go up for the next leg up? Like, I don't think a lot. Like, try it sometime in Bookmap, like how long you can buy like a 10,000 contracts. Do it on sim and set your size orders for 10,000 and just keep buying. Just keep buying, just keep buying, just keep buying, just keep buying until the market goes up, and then shake your market orders out. You just accumulate like an algo. That's all the banks are doing. This whole thing is manipulated. That's my opinion. I of course don't know, but look at what we're getting here. A little pop off of that, off of those tight ropes. So you might be out if you're short here. If you really have conviction that this thing is done and it's going to the basement, the safest place for your stop would be here. The second safest place for your stop would be above this drop right here, and maybe the most conservative place if you're not wanting to get wrecked would be here. Easy mode from here to here. That's the next check. So if we go from here, next check is here. If we go to here, next check here. If we go to here, next check here. That's breakout. So depending on how much downside you think there is in this, you can use these as a place to stop behind. And you can drop, those are all those things are, put an anchor here, put an anchor here, put an anchor here. That's what you're seeing here. This, and this. That's all those edges are coming from here, here, and here. And maybe back here. Whew. Okay. So that's how I sort out the higher time frame. And then within that higher time frame, I come to this chart and I start the day, and I just look at like, and I would strongly encourage anyone listening to consider like dropping VWAPs, and if you can do it automatically, dropping those VWAPs on every ETH open or every RTH open, one of the two. And if I could do it automatically at RTH open, I think that would be my preferred. Mostly because when the RTH open goes, what happens is the market on open and market on close orders fire off the market on open orders fire off at the open, and that kind of anchors the RTH VWAP, and then the volume later in the day accumulates that, and I would carry that VWAP through the night and restart my anchor the following day. Now I can't do that with IRT like conveniently, so I just use the ETH. But then what happens is the ETH is anchored with very little volume, and the RTH open really pushes that thing around because there's actually more volume in the first 30 minutes of RTH that typically then took place all night. So that VWAP kind of gets pushed around. Now it all balances out eventually, but my preference would be to anchor the RTH open and let it run till tomorrow's RTH open, and then re-anchor another one at the RTH open. I can't do that automatically. And like this, everything I do is an effort to not have to like manually do anything. Like I don't want to have to drop VWAPs. I don't want to have to like do anything. Just like look at the chart and narrate and call it good. So I would highly encourage you to either anchor at least 3 days worth of ETH opens or 3 days worth of RTH opens, and then narrate according to, if we're above one, it puts the next one on. If we're above that one, it puts the next one on, and always go in order. So like even if you have like your VWAPs are this is 1, this is 3, and this is 2. 3 is an obstacle in the way to 2, and then try to know like what happened. Did they buy that VWAP or did they sell that VWAP? What happened that day? So that if you're like trading with that VWAP or if you're trading against that VWAP, because it's going to be very different if a VWAP was bought up, it's going to contain buyers, and buyers that are really going to be looking for a pop at that VWAP to stay in the money. If this VWAP is filled with sellers and we go below it and they start selling, now those two VWAPs are moving in the same direction, or those two groups of people are moving in the same direction. And so we want to know, like, are they fuel or are they active participants selling the VWAP? So what this tells me here, at least in this moment, is that the algorithm is looking for, the market is looking for liquidity somewhere else, because this should have given us this. And if it doesn't, like, retail should have been able to push this up to the edge. And the fact that it didn't push us up to the edge, and it might go there eventually, but the fact that it isn't up at the edge is telling me that there may not be, there may still be downward pressure in the market. And I think the pressure in the market is because the market is looking for that liquidity. So the next step from the edge is to come to the rope, to the fatty, down here. There's a lot of people averaged in right here on this. And if they don't get it here, then the next step is to come down to the 0-day back full check. And you can see how the VWAPs start to widen out here. That's from an impulse in on 2 days ago. So we had, or 1 day ago, my bad. We had consolidation buyers where it's thick. These people are part of a consolidation. These are people are part of the impulse. So FOMO buyers here, consolidation buyers here. And so the real liquidity, like, they'll gobble up the FOMO buyers here, but they're probably out of the market. This is probably retail speculators. These are market on open orders, hedge funds, people like maybe a little more convicted. They were patient. They bought in a consolidation and a breakout. The real fuel, I think, is down here. But that's the next price check, is that where these VWAPs get thin. So price check at 40, and then it's a grind through here. So the easy money is here, and then we have to grind through here. These are buyers. Remember, all of these are buyers. And they might be hedge funds. They might be, central banks. This might be an accumulation zone for a central bank. And that's going to be really hard to bust through. If we get through it, then we'll make short work of coming through this. So think of like single prints. Short work of coming through this down to here, where we'll have another grind down. Get below this, and then we're kind of in, I would think of that as like free fall territory if we got below the 1 day back. Then we're in that higher time frame price ladder. Then we'll start seeing like a lot of capitulation, a lot of selling, a lot of profit taking. People saying, okay, I'm done. I'll re-enter, on Monday or whatever. But we can see some chop around here, and look for this level here to find buyers. And if we see chop down here, if we see accumulation and the market like chopping around here at this support level, then I would say look for a push back up to 58 and potentially a breakout to new highs today. If we fall through here, motor down, then I would say look for the same thing to happen down here. And then if we fall out of that, I would say look for the same thing to happen down here. So it's just one gives us the other. Developing, a rejection of developing, gives us this. Acceptance of developing gives us this. And everything in between is an obstacle. So sellers here are fuel, or they double down. Sellers here are fuel, or they double down. Sellers here are fuel, or they double down. This is where the squeeze begins. And so if you haven't been following me and you've been in the Trader Lab and you see me pop in every once in a while and say the squeeze starts here, it's because I'm looking at this edge and I know that the average position of every seller today is right here. The shorts are right here. And the shorts are right now, but in a higher time frame context, they're wrong. And so if their average position is right here, that's where the fuel really is. That's where the trailers are. They're like, okay, I'm going to trail this one to break even. How many people have done that, right? Like, okay, I got, I got 3 targets and my last one's at break even. Well, this is break even. This is your stop here on average here. So that's like where the ignition happens. And that's where, if we get to here, then we get to the guys who have their stops above here. And these stops get us to here, 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 and so on and so forth until we like pop the top off of this thing. And so that's what we're seeing in the market is the market is looking for liquidity. It's got orders to fill. It probably accumulated a short position up here, and now it's distributing that short position on the way down. And once it gets done distributing its short position, it starts accumulating a long position to go back up. And that might be, that might be today, or it might be next week, or maybe they're just using this to accumulate a long position, and they're going to keep accumulating it all the way down to 2-day back, or 3 or 4 or 5 or 6, or all the way back to the higher time frame. At some point, they're going to be done distributing their shorts, and they're going to start pushing this thing up to cover their longs. And so that's really what we're seeing here is where everyone in the market is positioned and where they're backwards, So even in this little microcosm right here, and this is not a big move. So from the low here at 49 and the high up at 54, that's 5 points. But I can tell you, these longs are averaged in right here. These shorts are averaged in right here, and the shorts are winning this fight at this OK corral, and it's not because price is below it, because that has nothing to do with it. It's because the average position of the shorts is starting to cross down below the average position of the longs. Price can go above, that's range expansion, but if it doesn't bring the VWAPs up with it, and I'm talking about these long-term VWAPs, not these baby ones, if it doesn't bring those VWAPs up with it, it's just range expansion. Price can drop below it, and now these average people are in the money here, and these average longs are in the money. So right here, this is balance for the battle, and the same thing here. This is balance for this battle. As soon as these VWAPs start crossing down below this edge, when this comes to a point, all of the longs are kind of fouquet'd, and the shorts are in control. And so if we're going to take a short here, the scale would be here, like on a micro level. That's why these are hard trades to take. This is why you get crushed, trading like inside. Like this is where you want to take the trades, here. You don't want to be taking trades like here. Like this is a continuation trade. And sure, you can take this, retrace to that group of sellers and sell that. But there's your scale, and if sellers don't continue it down, this thing could easily come back to here. That's the next price check up, is that rope. And if it does that, you just stopped out, full stop. So I want to take trades at the edges, at the big edges, and then I can use a wider stop because I have more conviction, because I know that the edge exists. Where if you don't really know where things are, a lot of times, like maybe you get short here and you're like, oh, I'm going to put my stop right here, because that's my entry. but you don't really realize that you actually have multiple edges here, and that your stop actually goes above here, and it's pretty safe up here because you have this edge, this edge, this edge, and this edge all like in confluence right here. And so like when you put your stop here, you run the risk of that edge getting taken out. And you know, it feels safe here, but it's like 2 points more up here. And if you can't stomach that 2 points, like this is not the place to get involved. Like there's our price check right there. So watch for potential response. Now this market can come down through here because it's looking for buyers, but potential for buyers that came in at this level to double down, and that level comes from probably this consolidation right here. Let me drop one on here and see if I'm right. Nope. Oh yeah, that is that consolidation right there.
Aggressive sellers might be high.
Okay, so sellers still hitting it. Look for 0-day back, and 0-day back is the developing day's lower edge. That's the over under to 1-day back. And so now that we're down here, the potential is for this to get bought up. And if it doesn't get bought up, then the next check lower are these ropes down here. And we can do the same thing. We can see buyers come in and try and take it up off of that level because they're doubling down at their average price. Or we can see it push up and fail and then come through. But we can see buyers at this 0-day back. This is the average position from the ETH. And there'll be retail buyers. There'll be everyone buying here. The algos may have all the liquidity they need. So use like all those contextual clues that you use when you're in, looking for trades, whether it's absorption, sweeps, stop runs, whatever. Look for them at these edges here. And somebody shout out what the stop run is. I don't have the stop and ice here, but I suspect we're going to see an impulse through here and maybe like a V-bottomy type look. I've got the sweeps indicator and I've got the absorption indicator. And I just use the sweeps indicator to like look for market buying. So if I see a bunch of market sellers, I assume that they're stops. I don't really care if they're stops or if they're, none of that matters to me. They are what they are. So I saw a little bit of absorption there, but no real stops. So the last thing I'll say on the planning is that there are opportunities every day to trade a higher time frame level to another higher time frame level, and I would really encourage you to add these to your chart. These higher time frame, so either RTH session VWAPs or full session VWAPs, and just go back in time and look at the relationship between today's versus yesterday's, and imagine like, okay, if I'm not talking about today's RTH, I would say 1 day ago versus 2 days ago if you're using just RTH. I would say look at 1 day to 2 day and say, okay, I'm only taking trades at 1 day ago, and I'm either taking them to 2 days or I'm taking them to today's full session, 0 days back. Or If you're using RTH, I'm taking them from 2 days ago to 1 day ago, or 1 day ago to 2 days ago, and just look at that. Only taking trades at those. How wide would your stop have to be, and how often does it get to your target? And I think you will be absolutely amazed at what you find. And like, just taking those trades, like, consider that. It's a beautiful thing. Okay, so we went 0 day back, failed to connect with 0 day back, and I call this close enough. It's like literally 46. It's like 1 point short of 0 day back, and now back to developing. Okay, so 0 days back puts developing, or 0 days back puts 1. Okay, now we're back to developing. Either developing goes to 0 for a proper check, or developing goes above and we start looking to come back to some of these ropes that are coming down from the top. So I'm going to put not all of them on here because I don't want the clutter. See how when they start cross hatching across, it makes it a little harder to see. So I'm just going to leave the edge so I can see that upper edge. So if you were if you were thinking long from 0 to developing, if we get above developing, the next area is right here. That's sellers up here. So that's the rope from here to here. So 53 3/4, that would be the next area. And then 55, and then 56, and then the upper edge up at 57. 57, and that would be the over-under for whether we're going to get into stops from the RTH sellers, baked into that edge right there. Contextually, we're pulling back, so any of these edges are an opportunity to sell in that context, but we came down to a higher time frame price check. Now, I would have preferred to run these through down at the 0 day back, but you don't always get what you want. So, and I didn't take a trade here either, by the way. I'm actually still short. So just throwing out some ideas. So developing rejection puts 0. Developing acceptance puts 53 and a half. And I'm going to jump over to my other chart because it has smaller bars on it. And then I'm going to turn off these so that I just see the ropes. And you can see the resistance here. So we have resistance here, and then that 53 up there. And you'll see me a lot of times do this too, where we've traded through all of this and it's just clutter, so I'll turn those off, and because what I'm really interested in seeing is the participants in this leg, and that's what all of this is, in this right here, and then the participants from the historical. So I don't want like all of this shit crossing through here because it makes it hard to see the ropes. So as we go down and click these, then I'll start turning off these blues, and as we lose this edge, I'll start turning on the edge. So I want to see that edge stay wet. Okay, there's our 0 day back. Okay, this is the over-under to lower prices. Craig is flat here, but if we break down underneath 0 day back, I'll look for a stomp here. So I'll look for the market to break down below here, retest it, and then look for a continuation short. This is a potential buy, and 0 day back a lot of times puts that upper edge on the table. So this is a potential area to interact with for sure. It's the over-under. But if we see weakness here, if we try to push up here and don't get there, if we start, there's also potential shorts in here. So do the work here. 1, 2, 3. That's the current micro clicks. If these two start growing together, then it's 1, 2, 3. And we can actually say 3 up here. Just monitor, just keep narrating this out and see where we're at. Right now we're at 1, 2, 3. This puts this on, or it puts this on. Just keep singing the song. And know that 0-day back many times puts that upper edge on. But we have some work to do. We have to get through here. We have to get through developing. We have to get through here. We have to get through here before we get to here. And then that becomes the over-under to higher prices or stay in the sandbox. Remember, this is the developing sandbox edge. This is the developing sandbox edge. So we are currently inside of the developing session sandbox right now. That's this edge and this edge. We're inside of it. And so this is saying, no, we're not going to lose today. We're not going down to 1 day back just yet. Buyers here. Put developing on. Developing. Puts this or that lower edge on. Okay, I'm going to let this thing ferment a little bit here. I don't have anything going on. My short was my short, and I didn't get long. So that's just the potentials. Now you can see how it plays out. And I promise you, if you continue to watch things in this way, you'll start to have confidence in levels. And they're like really clean levels. That I personally believe they're algorithmic levels. They're when we look for liquidity. And you go back and watch this stream and listen to what I said about that liquidity at full session VWAP, and think about that from the algo's perspective, an algo that's looking for 10,000 contracts or 20,000 contracts. Like, where is it going to find that liquidity? And like start to put together those pieces of like, okay, well, if he needs to like get out of 20,000 contracts, where does he want to do it? And where is he likely to get into 20,000 contracts if he wants to take it higher or lower? And so you start to look at the market from that perspective and forget about like what retail doesn't mean shit. These banks are buying and selling like literally hundreds of thousands of contracts at a time, and they need retail's liquidity. And so when the market is going somewhere there, it's really about like the banks getting the liquidity they need to mitigate their risk or to make money. And so that's, I think, what's happening. That's why we see the market come into these areas of high average prices, is because that's where the liquidity exists. So when you start to think about the market from that perspective, you start to see it a little bit differently, and you see why these things actually happen. You think it's because of some LVN that was made, in the micro composite, 6 months ago, and it's actually got nothing to do with that. That's really just kind of incidental. T46, I'm sure you're all familiar with him from T-Lab, did a great little demo for me. Look at this trade, man. So 0 day back, just smoke right up to here, and watch this upper edge. This is the over-under for higher prices or rejection and continuation lower. T46 did a great demo for me one time. He had me turn my candles off my chart, and he said put 20 random reference lines on your chart. So I dropped them all on there, turn the candles back on, And then he said, okay, now look at the support and resistance. And I shit you not, man, it was amazing. Like those lines were like, oh, look, there's support, there's resistance, there's support, there's resistance. And you could make a whole narration up based on these rando line placements on the chart. Uh, the same thing is happening in that micro composite. Like, yeah, I get it. There's something to it, but you're not going to get this kind of precision here trading that, and you're not going to get this kind of precision trading that. You're not going to get this kind of precision. Like, it's just not going to happen. And so, to me, this is the best thing since sliced bread. Maybe even more than since sliced bread. It really is just a beautiful, like, interpretation of the market. And obviously, I'm pretty passionate about it. So, I think anyone can be profitable in the market. And I think if you learn how to read it, like whether it's this way or some other way, there's a lot of ways to work. And this is just another interpretation of the same thing. The same thing. Just different language. But all of this shit in the middle here doesn't mean anything. What I'm interested in are the edges, and these are just resistance to the edge, places to take a scale off, because this might sell. I mean, this is the edge from here, and that might be it. We may not get to the edge, and if that's the case, I want to take one here, and then take one here, and then save one for the upside. So the developing sandbox is here and here. Here and here. The micro sandbox. The developing edge is actually down here. We just clicked it. So the developing sandbox is here. But on this leg, buyers here puts this on table. Sellers here puts a return to here. And this guy is rando. So, if you are interested, good job, Ra. Don't don't say IBH. I don't even deal in IBH. I don't even know what that is. IBH is I look at IBH only because I respect retail's ability to get in the way of where I expect it to go. So it might be a counter rotation, but if retail is taking IBH and it's the wrong one, um, I respect it. High of day, okay. So yeah, but high of day has to get through this edge, and so where I expect this trade to turn into a punt scenario is right here. And where I expect it to fail is right here. So you can have your stop here, and this is the actual failure right here. But if we get below this edge, it suggests we're coming to here anyway. Now we had a higher time frame price check, and this is an important price check. And I think taking 0-day back to here is a worthwhile shot. But I will tell you this sets up a short here. If 0-day back doesn't take this edge out, it's a short back to here for continuation lower. How many times have you seen where we put in a high and then pull back and test lower? A lot, right? Like, that's kind of the whole thesis of going for overnight high and then selling it back down to IB low. Because that's kind of how the market tends to work. You put in a high and then you go back to the middle or try to put in a low, or you put in a low. So that's where Tom says all the time, the market goes up to go down. That's what he's talking about. Like you put in the high, and then once you have the high in, it usually doesn't go back to the high. It kind of like, once you see this, we either stay in the middle, which is, the middle is between here and here. We either stay in the middle, or we explore lower. Like we very infrequently come back and put a high after we've already liquidated below the 0-day back, or down to the 0-day back. So 0-day back is a long opportunity, but with some caveats. If you can't take it over here, then it turns into a short. And that short is actually contextually correct because we're at the second half of the day here, and this is what the market tends to do. It goes up to go down, and so we've already gone up, and now we're in the to go down part, and we either go down or we stay in the middle. But there's a pretty middling chance that we're going to get above this. So watch this edge here now. If this fails, it suggests a return to here. And look at where we came up to, the sellers from the drop. So if you anchored a VWAP right here, I think that's, or maybe it's back here, I'm not sure which one of these two, that's where these sellers came in, into that big fat rope. So I'm not saying that, we don't come down here and then go up and finish the job. This is the destination for the long right here. We didn't quite get there, but we're pretty dang close, 55, 56, so you're a point and a half short. That's the destination for that trade. Got cock blocked, got stopped right here by sellers coming in at this level, and we're in a downtrend. So this is counter trend to this move here. It's counter trend to this part of the day where we put in the high and potentially are going to go put in the low or stay in the chop. So what do we have here? A stomp at developing VWAP. We look to break high, stomp this, potential continuation higher, or rejection here. New VWAP sellers, if VWAP sellers come in here, they'll make quick work of this back to here. So we just have to be careful at this edge. So your question was, let's say you have a runner for IBH. Would you take it at the IBH or slow roll to 70? I would take the runner to here, or I would take the trade to here, and then I would slow roll this. If we break above this and then pull back to it and continue, I might hold on to it. But if we just came up and we did this, I would probably cut it loose, like right at the edge. So I'd stop underneath here. So I'd come up here. If we started doing this, I would bring the stop right up underneath there, and I'd just say I took it to the edge, full pull. In the context of the day, the context is kind of down right now, and we certainly could go on to print a new high today. That is absolutely possible, but we're counter trend. Like we pretty much retraced to the average price of the overnight. So we've given a lot of this back. The potential is absolutely to come up here and continue. No question about it. That's the higher time frame theme, but like from a day-to-day perspective, it's not what we see. That's why you can sell the overnight high a lot of times. Now we are way out of range. I mean, we're above the overnight high. The overnight high is down here still. So we're way out of range. I think some profit taking is reasonable here. I think Raw had a good trade there. I would absolutely manage that trade, simply because think of the price checks, think of the narration. Okay, the trade is from here to here. We failed to get to here, and now we're back to here. So if this fails, then this is the next thing on the chopping block. It's also longs from developing VWAP. That's the higher time frame edge. Like the average position from RTH is right here. So there's a lot of people that are like, oh, eat a little downside, and then it went above it, and they're like, oh shit, man, if it comes down again, I'm out. And so you have that kind of sentiment here baked into this edge here. And if you're okay with giving all this back, by all means, this is worth a shot. You know, this is the liquidity right here in these fatties. Uh, this this if we come down into here, there's really not a lot of liquidity for the algos in these wider space. The liquidity is down here. So if we lose this level, we probably come down to this level here. But the algos may have what they need. You know, we've come a long way. There's a lot of liquidity available on the way down here. And now we've pretty much cleaned it all out. So we have to fall out of the day to get down to here and get more liquidity. And that's entirely possible. So I would be managing this trade because just with the awareness that, you know, historically what happens. And that's not to say we're not going here. And it might be worth a shot, you know, if you're comfortable with that. If you're not, here, and if you're not, maybe you took it off at this resistance or, you know, somewhere in between here. And those are all just personal decisions, like based on your account size, your risk appetite, like how well you've done for the day. But high of day, uh, yeah, I would be looking at a nice impulse up here and then a retest and hold. And to be honest with you, I probably would be flat here. I might be raw in this condition. I might be like, you know, missed my scale, but I think that would be my runner. I don't know if I would have a runner for that. What I would probably consider doing, if we had like a nice impulse up and started squeezing, I'd look for a stomp of that edge and then maybe consider buying that edge. But I think this is going to be hard going here. There's a lot of sellers baked into here, and I think that's what we saw here, is just like people selling, and they could be wrong. If this algo's got what it needs, this market is not going down. It's not. But that's only if they got what they need. If they haven't accumulated enough, or if the market hasn't pulled back enough, then it'll just keep going. But I see a short potential from DVWAP back to 0 if this lower edge fails. And so that's kind of the Tom trigger, you know, like you use those reverse triggers. I'm just using the reverse area. Like I know everybody, including, you know, anyone that got long here, they got their stop somewhere between here and here, or here and here. So I can see if new sellers come in here, if we get VWAP sellers, I can see a cascade pop, 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 down to here. Maybe range expansion here. But if we see VWAP buyers, the sellers that came in here, pop, 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 right up to here. So it just depends on what happens at this edge. We have two edges. We have a buyer edge and we have a buyer edge, both aligned. So think about that too. Like what kind of participants are here? Buyers, new buyers, and you're in line with them. Sellers, and both of them are getting fucked at the same time. back into Menudo. I'll let this thing do its thing. What'd I miss?
Absorption. Sellers 84.
Rod, did you hold on to that? New buyers above here. Put a continuation up to this upper edge.
Absorption. Buyers 81. Absorption. Sellers 73.
Yeah, good for you. I think you got a good trade here. I just, what I want to see, and I actually took the long down here off of this edge, and I'm scaling right here into this rope, and then looking for a retest of this rope, and then continuation up. I think the only thing is you have to be willing to give back the last lot if you're going to hold a runner. Um, Trailing it up really tight, like no matter how you do it, is going to take you out eventually. So you either have to like be willing to take the trade and take the, give it all back. And if you're not willing to do that, maybe you're not like getting in at the right place anyway. Like if you don't have the conviction to take it higher. You took it like this is a really aggressive trade. That's catching the falling knife, and I respect that, and I try it all the time. That's the best entry. I mean, you got 10 points in this thing, and I've got 3. That's the difference. And you could have added here, and you could have 10 plus 3. So I really like taking the trade right when it occurs. But it's also a riskier trade. But after you do this for a while, you start to see that you can get away with that because the levels are the levels. They're like we talked about this the whole way down here. We talked about like why those ropes were important, where it might go, what it might mean. It's like you see that enough and you just start to go, oh, okay, I get it. Instead of waiting for a trigger and waiting for, this or that, you just trade the level and learn to have confidence in the level. So I'm proud of you. I'm proud of you. And then we have the VPOC up there on top of that, which, you know, I respect retail's ability to sell VPOC, but it's not that high volume up there is something to rotate on both sides of. I think in in my world, that VPOC is outside of this upper edge, and this upper edge is going to provide either a squeeze higher, and VPOC isn't going to stand in the way of that, or it's going to die out at the upper edge here and get sold. So I have to be thinking about being out at this upper edge, or do I want to carry one for the punt? And that's when I'll start looking at, absorption and sweeps and see what's the money doing in this situation. Are they selling it, or um, are they going to let it go through? Seeing some sellers at that same level that was sold before. And it looks like it's coming back to VWAP and DLE here, so the lower edge kind of once again it's rinse and repeat. If the lower edge falls, it puts this on the table. If buyers come in and fail to get to here, then it would put this on the table. If buyers come in here, then it puts this upper edge back on. All right, we're coming up to that upper edge now. So this is the moment of truth. There's a little bit of liquidity right there. Not a ton of liquidity, but so we'll look for that, excuse me, we'll look for that 56 liquidity to get popped, and then the 56 quarter breakout. And if we can get the break on this upper edge here, and continue buying, then next target, developing VPOC. I think I would slow roll. Dang it. Got this frickin' flambot. I would slow roll the developing VPOC, mainly because I think the reason that we broke out in the first place is because the market found its buyers, and so I think we have maybe a higher potential than the developing VPOC because of the breakout of this edge. So looking at this in combination with the potential breakout here, and if we can get that breakout and find buyers above here, I don't think developing VPOC is going to be the end of the road. It might be, but I just kind of think in terms of where did the money go. So I think there's a real possibility to stay inside here and chop. And of course I have no idea whatsoever if that's what transpires. But certainly a possibility. Popping the top here, so there's our edge. And there was a little bit of liquidity there that filled 183 sellers. Let's see if buyers pig pile in here. Certainly stops can fire on this. There's a lot of sellers from high of day in here. So new buyers, new buyers, and the potential is real that we start firing stops on this. But it's going to take them both. And it's not going to take a lot because the market is long.
Absorption. Sellers 86.
Got the motor firing. $58.25. There were a bunch of sellers there. Buyers above that, and
Absorption. Buyers 87.
sellers doubling down at 58.25. I think they're going to get wrecked, but no idea. This breakout, if it fails, has the potential to come back inside. This is the upper edge, the developing days upper edge right here. I've just erased it so I can see the trailers below. So if we come underneath here, 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 and we need one more here, here, maybe two more. Yep, right there. If we come underneath this edge, it puts this, and full return to the lower edge down here. If we can hold this edge, higher prices. This is not the kind of stomp that I would look to long. If I was going to long a stomp, it would be a little bigger so that that edge has some range back to it. This is promising if you're in the position. This doesn't mean anything to me as far as like engaging or adding to a position. potential still is to pull back. So from a narrative standpoint, the market expanded range, put in a high, built out an upper edge, sold the upper edge, sold the upper edge, sold the upper edge, came back to developing VWAP, where developing VWAP gave us the potential back to the upper edge or back to 0-day back. The market chose 0-day back, came back to 0-day back, which gave us the potential for 1-day back or back to developing. The market went back to developing. Developing gave us the potential for 0-day back, which it rejected, and then chose the upper edge. And now we're back at the upper edge, where we have the potential for breakout or to climb into this micro price ladder of 2, 3, 4, which is the micro lower edge here at developing VWAP. So at the higher time frame edge, from the selling from today, we have the potential for developing, and we have to get through here to get there, or the potential to break out. And currently we're above that edge, which is promising to the upside, but we have to bear in mind that it was promising here too on those pokes above, and it folded up underneath. So if it comes back underneath here, potential to click down through these levels and back to here, where it's going to decide 0-day back or upper edge. So we have some trade management decisions to make to the upside.
sellers 108.
That little poke got bought up in a hurry, didn't it? Just a note, sellers, sellers, buyers. Resistance becomes support. My stop's underneath that poke. That was a nice rip down. So if that's signaling a breakdown, and this is a short setup down to lower prices, I think I don't want to overstay my welcome. I do like that absorption that took place there, but that's kind of the end of the road. If we see sellers come in here, then we're coming all the way back to the edge probably. And my position wasn't down here, it wasn't great, it was actually up here. So I don't really have a lot of room. I'm going to try and keep a couple pennies. I'm going to step away here. I'll let this thing just do its thing. Hopefully we pop the top off of this and continue. Otherwise my stop is down underneath the buyers here. So I'm giving it 53 1/4. Well, it looks like we have the game on here. VPOC next, and this one I'll definitely slow roll because I think the breakout has already taken place. Could be wrong. It could be the same as this one here, or one of these here, or this one here. So these are all range expansion on that upper edge. And this most def can be the same flavor. However, this range expansion came in the context of the beginning of a downtrend. This came in the context of continuation. And this is in the context of finding buyers, or the inverse, a lack of sellers. So it's a different range expansion, and not to say that we don't come back inside, but my theory is the market found its buyers. It came to where we expected liquidity to be, and now it's expanding range with the market, with the higher time frame participants. And that is all just me doing my thing, speculating on what the market might do. Good job on the exit of your runner at 56. So I see the price check at VPOC. I see the potential for rotation down, but I also see that the higher time frame got its position, and I make the assumption that they're repositioned for the long side, and now they're distributing everything that they acquired on the way down here, and now they're shaking it out to come back. And so if they were in accumulation mode from high of day down to their ultimate loading zone, then I would expect that they're going to redistribute these back towards high of day until their coffers are empty and they need to reacquire. And when they reacquire, we're going to see some chop, 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 back and forth, back and forth, back and forth before they plunge it back down to take it south. And that could be an algo, or it could be collectively the retail space. It could be a lot of things. So when I talk about the market or the algo, I'm just talking about everyone in general. That's like we're all doing the same thing, you know, like we're acquiring a position. Maybe it's one lot, but we're acquiring it, and there's so many of us doing it that it starts to look like there's some significant things happening, and there are. We're acquiring a position, and we're all collectively redistributing it. Ra got out at 56.5. I still have mine. Somebody else is going to hold for high of day. Somebody else is already out down here. Somebody scalped it. But it all looks like the same thing when you layer it all together. And a lot like you were talking about that top step, you know, the people that are short versus the people that are long. Everyone's kind of following each other. I'm following the market too, you know, like, oh, well, if we take out this level and refuse this level, then I want to be with those guys selling, or however it works. So we're all kind of playing follow the leader to the next guy. And then the question up here kind of is like, how do you handle coming into all-time highs? So from a VWAP perspective, we've got nothing above this edge right here that was created from the sellers from all-time highs. And this is the ultimate target, and we can manage it with these trailers coming up, but we don't have targets. There's nothing to shoot for overhead except for empty space. And so it kind of comes down to a choice, like, okay, do I take it off at all-time high, or do I try and cash in on like this crazy bull market and then maybe try and slow roll it? Maybe you say, I'm going to do a 1-2 and I'll get out on the 2, or maybe you know, give it a 1-2-3 and really try to catch some upside. Like, those are really hard, really tough things to consider, because you could literally give back, you know, like your entire trade. The best trade is to take it at the target. In my opinion, the best trade is to take it at the target. If you try and slow roll it, you're almost guaranteed to give back 2 or 3 points. And you do that all day long. You know, every day you give back 2 or 3 points on 2 or 3 trades. You know, and that adds up. So you want to take the trade like at a target, and there's always an opportunity to get long again down here and bang for that target again. So if we're coming into all-time highs, there's an expectation that we're going to pop the top off and then continue higher. But there's also the expectation that there's a shit ton of sellers up here that are going to sell, and it's a tough call, man, to like sort out whether you're going to continue going up or whether we're done. So my inclination is almost always to try and slow roll things, to have a stop that's tight enough to stay in the trade, but loose enough where I can, or tight enough where I can protect profit, and loose enough where I can stay in the trade. And it almost always ends up in giving back a little bit if it goes against me, and then many times putting in that high anyway, or low, depending which way you're swinging. So it is a crapshoot, which is why you have to have kid gloves with yourself and not expect that you read the market perfectly. So I just marked out these a little differently. I have micro edge here, micro 2, micro 3, a little less micro 1, 2, and 3 here. And those are super duper, right? I'm talking like five 25-cent rotation micro, but just kind of narrating like how you can break this down, like all the way down to the micro time frame. So 3 should see buyers in a test of 1, and if it doesn't, then potential to come all the way down through here. And we're seeing a little bit of an impulse down here. There was some absorption. There are some trapped buyers up there above VWAP, VPOC. So let's see what happens at 3 here. I expect 3 to give a rotation up, and if it doesn't, so 59.5. If 3 doesn't give a rotation up, then I would expect sellers could take this thing down for a stomp on here, which would be, if I were long from low of day, that might be an add. I don't know. That's not really my game, but I would potentially re-enter there. I'm not going to eat that rotation down. That's just a fact. There is a delta check at 58.25. And when I say a delta check, what I mean is there was market sellers there that were absorbed by buyers. So there's 1,000, somebody had 1,000 lot buy order that sellers tried to sell into earlier today. It's not in this leg. It's all buyers in this leg so far. The sellers came in at 62.5. We want to see this 3 hold, and then violation of the upper edge. And for this upside to be alive, we need to break that edge and find new buyers. Stop is underneath that poke down, and I'll take it off right there if it comes to that. There is a delta check, and I 58.25 might be a better spot to take that. Or to stop that underneath there, but I just didn't have like great positioning on this anyway. So 10 points on the last one, and I'm flat. 10 points on the last one, and a couple of scales. So it's looking like potential short trigger here and a failure at this edge. Not a short trigger. Not a short trigger. Or maybe it is. It's not my couple. So context-wise here, we have a 1, we have a 2, and we have a 3. And I'm going to say 1 as in upper edge, micro center, lower edge, all coming together, making now a 1 and a breakout up here, or return to 2. So that was a pretty nice run from full sesh up. I still think we have high of day potential in this. But at some point you have to take your profits, and everyone has different places that they're wanting to take it. And mine was right there. And I also look at this as the trade is from wherever you get in to that edge. And then after that edge, everything else is like a gift at that point. Because this is the punt right here. And the punt a lot of times turns into a fumble. So potential short. We're like 6 points away from all-time high, maybe less. I'm not sure that I would be shorting this underneath all-time high, but the setup, looks like that. The potential setup looks like that. And this right here gave us the exact same look as this. And it got blown and buyers stepped in. So this can look however it wants to look. It doesn't make it a short setup, but it does have like a triggerish short look. Especially if we fall out of this lower edge here. Take out this swing, and then we could be back to here. But a short to where? Okay, so a short to here, and a short to here. 53, 56, and 61. And this edge here then opens the door to developing VWAP, retail, location, and then back through this liquidity that's actually been traded through. So then all those checks are just confirmations that the buyers are here. So if we come down to here, and goes up, it's because retail stepped in and took it up. If we come back to here, it's because retail took it up. The algos aren't going to buy these levels because they've already cleaned the liquidity out. So if this market is going to come down, in my opinion, the next place it has to come down to is here to find liquidity. And it'll get some liquidity on the way down. It'll get some liquidity when it runs the stops on this edge. But like for the real liquidity to reposition, it's got to come down here. And this market actually may be using this to accumulate a short position because we just clicked all-time high, and there's no guarantee that we're gonna just go up Monday morning. So like this entire range right here could be a short positioning for next week. Because consider how far this market has gone this week. Monday we were at the upper edge, and now we're 5 days away. So Monday we were down here, flirting with breaking down and returning to here, and then the Fed stepped in, earnings stepped in, whatever stepped in, and we went from 730 up to 860. That's a pretty good move. 130 handles. So it would not surprise me if the market pulled back a little bit off of this. Doesn't have to, of course, but it wouldn't be surprising. So we just keep taking trades at these levels and watching them and see which ones are holding and which ones are folding, and then like trying to trade in the direction that the money is trading, and being patient. And that's the key, being patient. Some sellers hitting it now. So the short trigger here sets up a return to here. And it's not much, it's 61 to 56, so 5 points down to here. And then if this fails, then this sets up this. And so the 1, 2, 3 is 1, 2, 3, and then we have the break down or the break up. So if we get below this, that's the price check. This gives us the upper edge or this lower edge. this is a retest of all of the sellers' positions from the high of day. So imagine if you were short from the high of day here, and now price comes into it, and you see how that just whipped down right there? That's because these sellers are in line with these sellers. So remember when I talked about knowing which side the developing session was on. So in this case, the developing buyers are above the full session buyers. In this case, the sellers are above these sellers. And so when we come down and meet them, all these sellers are immediately aligned with the selling that took place here. And buyers here are aligned with the buyers here. And that's why we're seeing these, that's why we see these big whips, is because that's the fractal alignment. And so these sellers align with these, and then we squeeze out longs, which is where this comes from. And then buyers step in, and they're immediately squeezing out these shorts, and they're aligned with the buyers from here. So we have micro buyers aligned with session buyers, and this is our developing sandbox right in between these two edges here. Micro sandbox, RTH sandbox, ETH sandbox, and they just are price checks. So if this seller puts this on, and this puts this on, this puts this on, and this either puts this on or a retest of this, if we fall out here, then here. If we fall out here, then here. Buyers here put a retest of this. I don't know what we call that. Punch the ceiling. We call this a stomp. This is punching the ceiling. I've got to come up with something crafty. But that's how I'm reading the price action. Just continually reading it. So this potential short, counter trend, didn't take it, not interested in it, but I did get out of my position up here because I kind of anticipated the potential for exhaustion there when we couldn't break above here. So I was willing to give it these VWAPs right here, let it pop down, took my stop underneath here, couldn't get up, got caught in the wash, and that actually, yeah, that was right here on this candle. No, it wasn't. It was on this candle. So I let it come down, couldn't get it, brought my stop up right to here, got taken out, and then that set up a short that I didn't take. And now there's another long back here if you're really quick and interested in trading in the middle, and this is what I would define in the middle. You could take that long back to this edge. Now, I've done this before, like had many trades in a day, and that's how you rack them up, by trading these. This is a really tight range, 53 to 59. It's 6 points, but what happens is you take these trades and you don't get it here, you actually get it like here, or maybe you get it on this, and let's say you get it here, it's 55, now you're down to 4 points. You don't quite get there, you get stopped out, or you take half a profit, and pretty soon you have $300 in commissions on the day. The best trades that the market is going to offer you, and they aren't going to offer it to you every day, and they're not going to offer it to you multiple times a day, is trading to a higher time frame target and from a higher time frame target. The very best. And then using the edges to align with those. So this edge to here, this edge to here, this edge to here, this edge to here, and then here, this edge to here, and then here, and then here, this edge to here, this edge to here, and then here, and staying out of the middle. So is anyone interested in seeing how to manually anchor VWAPs so that you can see where the edges are? Watch the upper edge. There's a long off of here. There's also a short if we fail here, back to here. And I'm not interested in these inside trades, but just noting that they occur. So watching this UE here, look at that. So that lower edge holds. And we go to the upper edge. And important to realize that this is a micro edge above the developing edge. So we've already squeezed out some of the shorts. Now the potential is to squeeze out anyone in this leg at this edge. New buyers at this edge, continue it up. Sellers at this edge, try to continue it down. All right. So I've talked about like manually anchoring and fractaling for trend days, and it's very much the same way. So I will turn off. I'm going to put these on a 1 minute chart. Actually, I'm going to turn them off first so we don't have to redraw them. Got one left here. Actually, I'm just going to take all my VWAPs off this chart. Never seen that before. Totally never seen this before. See if it I almost feel like I just broke it. Okay. There's a bit of the problem with these VWAPs. Every one of them have to be drawn. Oh, I just put it on a range. I wanted a 1 minute chart. I put it on a range bar. That's the problem with VWAPs, is they are resource intense. Okay. So let's just say that we came into balance today, and we knew we were in balance. We were in 2 days of balance. We identified that balance by looking at the 1 day back and the 2 day back VWAPs. And we said, okay, we're in balance because they're stacked. Or it was a 0, the 1 and the 2. They're stacked together, so we were in balance. And we knew that, and we can look back and we say, oh, we're in 2 days of balance here. This is the ETH open right here, or RTH open right here. So we opened in 2 days of balance. Okay, so if we're going to manually do this without like any auto VWAPs or anything to like help us, we're going to take a, hold on, I still got some VWAPs in here that I want to get rid of. Get a clean chart. So we're going to start with balance. And I have buttons that have manual VWAPs on them, and I can just take it and drop it. So I'm going to drop it anywhere in balance. It doesn't matter where, just somewhere in balance. Okay, and we're trading this day over here, so that's the edges we're looking for. Okay, so when we're in balance, what we want to do is we want to anchor the breaks up where we left that VWAP. So we left that VWAP right here. And we want to anchor where we left it on the downside here on this candle. And what that does is creates a high and a low. Okay? And since we're anchoring this day back here, I'm actually going to start on this day here. So I think, let's find RTH open and I'll hide it and then I'll show you the results. So I'm going to put RTH open right on the edge of the map, right there. Okay, so that's where we opened at. So coming into today, if you're trying to discern like how to trade this, I would say, okay, 2 days of balance. So anchor balance first. Drop that anchor there. And then we're going to start at price. And we're going to go to the last time that we broke down from price. So I'm going to use green on the low side. So we broke down from price here. And then I'm going to anchor the last time we broke up from price. I'll use red on the high side. Okay, we broke up from price. We left purple behind for higher prices. We left purple behind for lower prices, okay? And so then I'll take another anchor and I'll anchor where we left here, which is right here. And what I'm looking for is where this anchor crosses below a lower anchor. And that occurs right here. So I know that I've found the extent, the outside edge, on the upper side. I'm going to do the same thing on the downside. I'm going to look where price left this VWAP, and you see how they crossed over here. This one crossed above a higher one. So I've now found the outside edge of this time frame. Okay, so that's this balance here for this day. That's my intermediate time frame sandbox. That's yesterday's balance area, intermediate time frame. That's the 1 day back comes in here somewhere. I'm sorry, this is today's RTH. That's all of that. And so when we step back a little bit further, and we do the same thing here, and see how the selling actually dragged this one down below. So we're looking for upper edges, not lower edges. So I'm getting rid of this one. That's not useful. Now we're going to go to the downside again. We're going to look at this breakdown here. And we can see that sellers here on this breakdown are below purple. So we can get rid of this one. And then we anchor the breakdown from here. And we see the cross here. And we say, okay, we've now found that lower edge right there. Go back in time and we do the same thing again. Here's another breakdown. We can anchor that breakdown and we see that this breakdown gets broke down here, and then this one gets broke down here, and so now we've found the outside edge of this day on this one, breakdown on this one here, and then breakdown on this one here. So now we have the outside edge, and ideally we only care about outside edges, so we would delete the ones that are in the middle. Okay, so let's go back a little bit further with the break ups. We checked this one already, and that one dropped below purple, so we don't want to worry about that. Let's come all the way back to here and look at this one. This one dropped below, so that one's not relevant. So we've found now the upper edge and the lower edge extremes of all the price action in this upper consolidation, and we can go back further and find the next balance, which is right here, and we could do the same thing. It's enough to do this to come into this balance. So we'll use yellow for this one. We'll come into this balance and look at the breakdown here and see that there's a cross here. So that's not helping us. That's not adding to the narrative. We're looking for outside edges. This is so far the outsidest edge. And we could do the break up, but then that's going to put a VWAP in the middle here. So this is actually the next downside check if we fall out of our sandbox. So let's get rid of the ones that are not relevant. Green isn't helping us because green is a low. This green isn't helping us because we have a green below it. Red is a high edge, and so when we come into the day, into that balance, you can see buyers here, bring it back to balance. Come above, comes back to balance. Buyers here, bring it back to balance. Come above, brings it back to balance. Buyers here, brings it back to balance. And I'm talking balance in the sense of this purple VWAP. That is the balance of this, what do we have here? 1, 2, 3.5 days of price action. And so they're buying this level, bringing it back to balance. Buying this level, bringing it back to balance. And so manually, you can do this, and without like having automatic anchors for anything, automatic rolling VWAPs for anything, you can see that if we're in balance, we're going to come down to a higher time frame level and look to come back to balance. We're going to come down to a higher time frame level and look to come back to balance. These are just showing us the outside extremes of price action. So when we're in balance here and we see this, sellers come in, that's going to be the low-hanging fruit. It's going to be harder to get through these sellers and back to balance, so we want to take targets in order. So if we're going to take a long here, it's going to be long here, back to green, back to red, and then back to purple, and then break out. If we can't get past red, we're not going to purple. And so when I turn on, I'm actually going to come back to a time frame that I like to look at. So maybe we'll do like a two point range bar here. And now we'll flip on some autos. Oh, those aren't autos, those are moving averages. And so now we can use these. Oh, Jesus. I left off at 1700. Can you see these? Can you see the blues that I drop on here? They're a little bit harder to see, but you can see where the ropes then are that we're trading against. And so manually, I've kind of trained myself to read the lines, but you can see there's a fatty right there underneath the gold. That's the price check that we've come into and bought up, bought up, bought up. If we overlay it with the higher time frame VWAPs, did I just turn it on? I think I did. You see that that's actually this is the 3-day back, and then there's the developing VWAP, RTH VWAP from 3 days ago. This is where you bought yesterday raw off of these fatties here, and I had to manual that one in, but the autos kind of show like where, or the manuals that I dropped kind of show where the autos plot. And so you can do this without all the clutter of the whites. You can do it manually. It's really hard to manual in like intraday price action. It takes a lot of VWAPs, a lot of drops. But if you were to do manually to see this, the way you're going to do it is kind of the way that I have showed the trend. You're going to take it's going to take a lot of VWAPs and a little bit of effort, but it's absolutely able to do it. So if this is developing VWAP, we're going to anchor the last time we touched it, which was right there. And then we're going to anchor the last time we touched that one, and then we're going to anchor the last time we touched that one. And if we don't have that, we're going to go to the next consolidation higher, which is here, and then we're going to anchor the last time we touched that one, and the last time we touched that one, and the last time we touched that one, and then we're going to look for them to roll over. That's our outside edge. And so in this price leg, when we're coming down, we look for a higher time frame level to interact with and then target that upside edge. And so now when we turn on the autos here, you can see that it shows you exactly where that edge is. And so as you manually fractal down and up, it's always when we leave price. So let's say you're going to fractal this leg down and look for a lower edge. Let's actually start here. So we fractal this one down. We're looking for a lower edge, which every time we touch it and leave it, we just fractal it down. And then it's always when we touch and leave the last one. So there's our lower edge right there. There's our upper edge. And now you can see we're trading in between those two. And we could go back further and we could fractal this one down, and I will, just for shits and giggles. We can fractal that one down, and you're going to see another edge come in here. It's probably going to come in down here somewhere. I don't even know where it's going to come in, but we fractal this one down same way. Every time we leave it, we just drop a new fractal on it. So here, 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 and then we look for that edge. And the ones that we care about are the ones that are outside. So those are all gone. We just care about the outside most edges here. We don't need 4 million lines on our chart. The problem with them is that outside edge is constantly changing. And so like having 4 million lines on your chart is kind of what I do with the autos, but like these are the edges. So all of this stuff inside right now is not the edge. The edge is right there. That's the outside edge of price. That's your breakout area right there. So when we come up to that, and when I turn on the autos, you'll see how these line up. Oh dang it, I just put moving averages on again. You'll see how those line up. What the fizz? Did I just turn these on? Shit. Okay, look at how they line up with the edges. So we have the edge here, we have the developing VWAP edge here, we have a rope down here. If we add more whites all the way down, we'll see that there's a rope, and I don't have enough VWAPs to show it, but there's a rope right here on top of that 2-day back. There's a rope in front of here. So you can manually do it. That's the point. Look at this. All-time highs. New high. And a huge absorption into that, and sellers very active up there. So if you want to fractal manually and you want to avoid all the clutter of this, and you just want to like maybe have the hint of VWAPs without like all of the clutter, find a way to turn on a button. Find a way to activate a button of some kind, or an easy method of manually anchoring, and then anchor in that same way. When you have a leg up and you're looking for the outside edge of the leg, just every time, the last time we touch it, anchor it at the touch, no matter where it is. And if you run into a place where there's no touch, go to a consolidation and anchor there. Consolidation, anchor there. But the idea is to look for that cross. So when you have a higher anchor that crosses below a lower anchor, that's your edge. And so somewhere right in here is your edge. And then here's another thing. If you have higher anchors that don't cross, that's telling you that those people from that place in the market actually are very bullish. So like this is a higher anchor than this, and it hasn't crossed down. That's telling me there's no sellers taking it down. Even though price comes below this all the way down to here, it still didn't bend this down. So use that. That's an amazing context right there. Like price went all the way down here, and even the average position here, including all of this selling, like didn't even cross until way over here. Like it took buying this buying from this point here to actually get that to cross down. And so you can tell the sentiment of the market. Yes, price is going down, but the volume isn't going down with it. And that means it's not contested yet. And so that edge then becomes a potential place to return to. And so you've found the edge there, and then if you want to find the edge on this leg, do the same thing. Just manual this thing down every time it touches. Just break it down and look for the cross. There's your edge right there. We've got crosses up. And then you can go back and delete the stuff in the middle, especially if you're just looking for like a place to get involved in the market, like you want to scalp it from here to here. Scalp it from here to here to here. Look for the breakout. And we can overlay this with VWAPs, and you're going to see the same edges that I see. Edge here, edge here. It takes a lot of effort. It's a lot cleaner. It's a lot prettier to look at if you can keep up with it. But it's a lot of anchoring. And if you don't have I can hold control down and I can grab one of these and just keep dropping new ones like that. It's pretty easy to anchor in IRT and create those. And then I can come back and just highlight and delete the ones that are in the middle because I'm only concerned with the edges. So as you're setting up a trade in the day, like you can delete these ones in the middle, and then you're like, okay, I'm taking a long off of. We had 0 day back here, I think, right? I'm taking a long off of 0 day back. I want to scale in front of here. I want to scale in front of here, and then I want to hold for continuation. And that completely eliminates the clutter of all the other VWAPs that I have on my chart. So because I'm lazy, and I am, like, it takes a lot of work to get where I'm at, but I'm lazy at heart. I don't want to like do this shit every day, like dropping VWAPs and sort it out. So I've just kind of learned how to see this, in the chaos of this. So same, only different, but still same. We still have some liquidity up above here, man. This thing could go. We got liquidity up to 74. We got liquidity all the way up to 80, and quite a bit of liquidity at 80, 487. So this is your 0 day back trade, Rob. This is that thing still churning. And it's also the 2 day back trade from down here in pre-market. 2 day back. long. 2-day back, long. Pew, pew. So this thing's legging up hard. Ain't no joke. What's the top step balance? Well, I think it's okay. Um, it's okay to short the high if you have a reason to, but like right now, we're so far into the stratosphere, uh, like you don't really know how far this thing's going to go. And we do have a pretty thick slice of liquidity up above. So this could be the top, sure. But maybe let it show its cards. Let me just look at this in hindsight here. Long, long. Where's the short? I mean, we haven't even, like, at least let it come down. And maybe short that. Or why short anything, you know? Things just like motoring up. Reverse. Head and shoulders. I don't know. It takes all kinds. But we need those shorts to come in. The early shorts are the fuel to take it up. So in this, aside from taking out the high of day, which I think is what they're shorting, and it's just scalpers. And what like I don't even know the rules, but I know Top Step has some rules uh, on like drawdown or whatever, and so those guys that are shorting that, they're just looking for like 5 points, you know, trying to pass their eval or whatever. They're not really interested in a big move. They're just like, okay, we just hit the all-time high. We should get a rotation down to something, and I'll score 5 ticks off of it, and I'll pass my eval account. And there are locations that I'll pick the top on. I mean, like overnight high is kind of top picking, right? But we see rotations off overnight high, like big rotations off overnight high. So I kind of like that in the right context.
Aggressive sellers 90. Buyers 104.
So right now in the microcosm, we have consolidation. A 2 check is a breakdown. A return to 1 is a potential short trigger, but like, is this the place to be shorting? I don't know. Like, are we done for the day? Maybe. Like, I think the potential is to keep going up. Certainly the market is charged to go up. So if I'm going to short this thing, I don't even know what it looks like. I don't think there's a short in here today. We've already seen the market's not interested in the downside. We saw that right here because the traditional setup is of long from here back to here, and if this fails a short to lows of days, well, that didn't happen. So when something is kind of expected to happen, it doesn't. It has to call into question your thesis. And if that applied here or here, maybe it applies up here too. And this might be the top. But this looks like a bull flag to me, not a weakness. Now, so does this. Does it show you how many top step traders blew their account up? Game over. Anyone got an iceberg indicator? Stop and ice indicator? We must have some ice up here. But there's still a lot of positive delta up here. This is so freaking weird. I'm going to drop a screenshot into Disco chat. Check this out. Like weird shit going on. And if you don't watch this every day, it probably doesn't mean anything to you, but what the flip is going on here? Yeah, the ones on the right side, like all of those big rocket ships pointing up, and then like each of those days, each spike is a day. That's the up down volume for the day. So either it spikes up or it spikes down. And so on up days, you're going to have volume that's up volume, and it's going to be green. And on down days, it's going to be red. But look at those candles today. It almost looks like the volume went down, and then somebody just bought it up like a rocket ship. And they've been doing it all day, like buying hard all day, like every time it dips. I've never seen that before, and I look at this internal like every day. I've never seen like a pattern of up down candles like that. Well, it looks like somebody um, bought every time it dipped. They bought hard. Yeah, I mean, candles get bought up or sold, but like look at the shape of them. Every one of them is like a shooting star or a hammer, like a giant hammer. And these are 30-minute candles, but it's the same on a 5-minute chart. Like they're just, it's like Every time it went down, they bought it up right to the top. Every 30-minute session, boom, bought it up. Boom, bought it up. It's crazy. All right, so 62 and a half. I gotta drop this into a smaller time frame. I can't stand these big bars. So 62 and a half is the 2. We got the 1. Oh, we already got them drawn out. So let's go with bigger. Trash them. 1, 2, 3. So 1 gives us 2. 2 either gives us 1 or 3. And 2 is the meeting of the sellers from here and the buyers from here are at 2. So they're shaking hands here. So that would be a retest of that. And then that suggests a move back to here. And then I guess that would be a short trigger if we failed to get above there in the chop, 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 break low, retest world. I don't know that. I guess I would look for something a little more like that, that went kind of in a straight line down. This still looks two-sided. Like there's a battle taking place. I kind of want to see a liquidation happen. And to be honest, like a short trigger, even if I was going to short this thing, I'd want to see it come like down pretty hard and then reject pretty hard. This was a short trigger. As was this. This is just shit. There's a short trigger right there at that. This could have been one, but it didn't shape up. I don't know. I don't know about shorting this. We got 4-to-1 breadth in the ES and NQ. And the breadth today actually maxed out. Let me see here. There we go. That's the kind of liquidation I want to see. I want to see a I want to see an impulse. So this is good here. So we got a breakdown. Now we should see a retest here. And this is a potential, like, I don't even, I'm done. I'm really done for the day. It's 2:47. But this is a potential retest of that. Upper edge. If we don't get it, then that sets up a continuation down to here. And this is all of the buyers in this leg are averaged in here. So the weak late longs coming in here are right here. Below here, sellers below here is a squeeze down to here. So 62.5 to 57. Not unrealistic. And then a falling out of here would be set up the potential for a squeeze back to the lower edge. But buyers here put the upper edge on and potential continuation in that higher time frame.
Aggressive buyers 112. Absorption. Sellers 89. Aggressive buyers 163. Absorption. Sellers 129.
So the put call ratio is flat now. It's been going up all day, and it got flat at really at 9:25. The puts or the calls got stopped buying, and now they're just going sideways. And put call ratio, that was for NQ. Put call ratio in ES has turned down sharply at 2 o'clock. So 2 o'clock Central, uh, they're starting to short this thing with options. And I don't know what contract it is. If it's, I think it's just all options. I'm sure 0 day influences that hard. I think it's actually that those candles are actually a glitch in Thinkorswim. They're just weird. Like I scrolled back through. I've never seen it before. It just looks. It looks like I need to refresh the chart or something. Okay, so theoretical setup, return back to here, rejection here, sets up a short. If we fall below here, it sets up a return to here. This is not the short that I would trade, that I would look for. I would look for a short like this, clean, one pump down, clean rejection, short. This looks more like a flag, and it's hard. I want to see like a move that's compared to the price action around it. It's a much bigger impulsive average true range of that time, and I'm just not seeing that here. And so when I see this, I think, well, a short would be nice because obviously we're up here, but I don't see the short. You sure could take this, but what do you scale into, and where do you take it? I need to have some range so that we get a clear idea of which direction this thing's going. I mean, it still looks like we have a ton of buyers at the top. I don't think anyone's even selling this yet. I'm going to let this thing go for a minute. I'll be back. Well, closing in on the final minutes here. Looking like the market is going to close right at this VPOC.
Absorption. Buyers 99. Aggressive sellers 127.
Sorry about that. It's pretty loud. Uh, if I had to guess, I would say 57 for a close. I'd say right down at 58 and a quarter. I'd say right down here.
Absorption. Buyers 102. Absorption. Sellers 101.
This is a return to balance on this fatty here. Potential to rotate on both sides of it.
Aggressive sellers 130. Absorption. Buyers 108.
So I would say this has the potential to leach down, if we get below this, to leach down into the last hour after the cash and just slowly kind of pick people off. I don't think we're going to see a round of buying that takes it up and tries to push it higher. If I were short here, I might consider just holding this thing into the close and see if I can squeak a couple more ticks out of it. But uh, who knows? Who knows? Guys, it's been real. It's been fun. It's been real fun. Thanks for stopping by. I appreciate your interest, and I hope that you did well today. If you learned anything, or if you used anything to your benefit, let me know in the chat, and I will get a stream up for Monday and do it all over again. So show up and be ready to go. Have a great night and a great weekend, and I'm going to sign off right here. I'll leave the stream up, but I'm going to check out.